looked over to his left and he called Charlie. I thought that was a historic moment, actually. To be honest, it was a very good way to basically get everybody think about that moment.
All right, what is up, everybody? Start of this stream right here. I am live right now with a couple of my friends. Jaguar's in here right now. We are talking about the Berkshire Hathaway annual shareholder meeting from 2024. I'm gonna post a couple stuff out so we get some people in here, but I think we are fully live. I'm looking at this; it looks like we're live, and yeah, I hope you're excited for this stream. Talk some Buffett, and we'll go through everything.
How he mentioned that it could be a good or evil depending on how it is basically
Talking about AI.
going to be incorporated into many parts of the economy and services over the years to come. And I think at one point he used the word scam, that basically AI is going to basically take us to the path where it's going to become very easy to scam people. It's not entirely hard to see why he would think that way, because today, or I feel like sometimes even now in social media, what's fake and what's true becoming increasingly hard when you see an image or a video, and it's hard to know exactly, is this AI created or is this real? And I think that's exactly what he was talking about. And this is just a beginning. In the future, there's going to be whole literatures and arguments and opinion pieces, and one would not be able to tell whether is this written by a human or is it written by AI, and what is the message being sent across. So that kind of stuff. And I think the more it proliferates into the economy and the markets, the more impactful that will become. I think he has all these things in his mind, and I think he framed it as a scam precisely because of these concerns. But he also at the same time acknowledged that this could be also good, right, for everyone, and if it is done the right way. So I thought that comment was very, very interesting. And I think aside from that, in his usual ways, he was very optimistic on the economy. He was very optimistic on almost every single thing. One thing I also thought that was very interesting was when he actually advocated that he wants a very large cash pile. And he mentioned specifically at one point, too, that he simply does not find very attractive investments today with the rate at over 5%, the risk-free rate. And he's always hunting, he's always looking for key, but he's very specific. If you read his history, he goes after companies that are great companies trading at discounts with strong moat and high free cash flow. But even in that part, he's having a hard time. It was very clear, given where the risk-free rate is, to find those opportunities in the market today. So he continues to build a cash pile, which is now approaching $200 billion. It's become a new record high for Berkshire Hathaway. And so if you think about this, what is the market capitalization of Berkshire? About $800 billion. So about 25% of the company's total assets are in the form of cash, and he keeps building it. At some point, he's going to get aggressive and deploy, and if it's not him, then it'll be whatever the team will be after him.
What's up, Pick Six Cards? Appreciate you joining us. This should be a good conversation.
When he
Hang out
hit
with
on
us.
this topic, that there's simply not as many attractive long-term investments to find in the market, and I don't know when he will see those again. So, a lot of sound bites, a lot of interesting takeaways, and I thought the entire thing was just fantastic. So yeah, I'll go back to you. Feel free to add to any of this.
Yeah, it was definitely a couple of interesting points you brought up there, Jaguar. Definitely some takeaways from it. I will say on the AI talk, I'm not surprised on what he said. He also did say multiple times that he does not understand AI. He got probably prompted 3 or 4 times to talk about generative AI, and he really kind of refused to do it. Every single thing he did preface was with, "Hey, I know absolutely nothing about this," which kind of fits with the ethos of Buffett and what he talks about. And I'm not surprised at all that he had no real opinion on AI. But yeah, that one story was an interesting one, and it definitely does make you think. Well, there's going to be some positives, going to be some negatives from it. Looking forward to it. Yeah, I thought the conversation.
One question: who was that gentleman's name? Abel. What was the
Greg
one?
Abel, yeah, he's going to be the next Berkshire Hathaway CEO. So at least it
That's what
looks
it
like it.
sounds like, right? But it's
Yeah.
not been confirmed yet. Is that correct?
No, so the board is still going to go through, and at that time they're going to talk about it. But Warren Buffett said during the shareholder meeting yesterday that if he was on the board, he would vote for Greg Abel, which I feel like kind of does the amount of power that Buffett has here. I really do think that no matter what,
Yeah.
it will happen that way. But yeah, no, nothing fully confirmed yet.
He may very well be the CEO to run this company after him, right? So we have to start thinking that way if he is endorsement of Warren Buffett. So yeah, it was interesting to see him on the stage with him.
Yeah, there was a lot of thoughts and interesting. One thing that I thought was kind of interesting, and I obviously will a lot of different talking points here, and we should get a couple people joining us. Jaguar around Paramount. He said that Berkshire Hathaway sold all of its Paramount shares, and he was very adamant in saying that he was the only one who made that decision. And that was fully him, only one that really did it. And he said that multiple times, which I don't know if I believe him. It's easy for Buffett at this stage in his career to try and take the blame for something. We know that not one move is going to really hurt his reputation too much. There might be some people on Twitter who come in and say some different stuff, but at the end of the day, Warren Buffett's reputation is pretty safe and sound. But someone like a Greg Abel, someone who might be coming in and taking over, they don't as much have that luxury. So I don't know how much I actually do believe that this was all from Buffett, the Paramount move. I think that there might have been some other people into it, and it makes a lot of strategic sense for him to come in and try and take the blame with that one. I don't know if you saw that part of it or have any thoughts.
Yeah, I did see it. I think I think he's looking past beyond it. I don't think there's any deal there. I don't think there's any interest that he has at that point, at this particular time in that stock. It's going to ultimately become a restructuring story, just like it has been for a majority of the media companies over the years. And I think that's essentially where Paramount future lies. Deep value, lots of content, fully understandable. There is definitely something there, but I think that growth is simply lacking. And I think Warren Buffett is simply looking at better opportunities beyond just that. There was another comment about, and I think this one made a lot of buzz on the media, that he sold 13% of his position in Apple. Now, I think people are unnecessarily making a too big of a deal about this, but he is in the cash preservation mode. You have to understand exactly the moves that he has been taking, right? I mean, cash pile is rising, and he has generally been more of a seller than a buyer in this market. And so, Apple is simply just one of those moves as well. And I think that it may simply be a reflection of a position that is just too big in the portfolio, and he's downsizing it to something that is more reasonable. I don't think it's more than that. And secondly, there's also something to be said, and this is purely just my view, more than anything else, which is that I don't think Berkshire wants exposure that is heavy to China in areas in the market that has high exposure to China. Because remember, there was a while ago where he did similar kind of a big move. I think it was a year and a half ago in Taiwan Semi, where he took a large position, and then within 6 months, he dumped the entire position and he got out, which was very unusual for back then too, for Berkshire Hathaway, for something that is so quick of a turnaround in Taiwan Semi. And I just feel like that the move that he made in Apple is simply to resize the position that is relative in terms of risk to the total portfolio, and then also maybe just continuing to go down the path of just not having too much exposure to China. But that's just my view.
I did think, I don't know if you heard around the Apple conversation. I did talk about this a little bit before, but I think there's two main things that I picked up on for why that might have happened. The first one, like you were talking about there, is the kind of general thoughts on cash right now and the market and opportunity, and him saying multiple quotes. Let me get it up in front of me, but it was something like, at multiple times in his career, he's been awash with opportunity where he could have spent the entire money by the night. And this is not one of those times, which I think we know, and he's definitely talked about a little bit. Yeah, that's this quote there. But also, one thing that he did mention was around taxes. He said that he thinks that the long-term capital gains tax rate will be going up in the near future. And what is it, 21% right now at the cap? He was talking about that just a couple of years ago was 35%. He seems to think it's going higher. And again, I'm a Apple shareholder. It is my largest holding, so maybe it's a little bit of copium and just wanting to shed some positive light on a move that he's selling some of my stock. But that conversation and that kind of language did make some sense to me, and it could be taken as he wants to take that 20% right now. When we're talking at the scale of how much he sold, what was it? Let me get it in front of me. They sold they started with around 135.4 billion. I'd have to look into how much I think they sold, but
Well, on a
it's big at that
percentage
scale.
basis, if I'm not mistaken, I mean, and people get confused about this all the time, but Apple represented at one point 50% of its publicly traded companies' portfolio. I think people see this 50% and they just automatically assume, oh, it's 50% of all of Berkshire Hathaway. That's not true at all.
Yeah.
You have to take into account many companies that he owns outright 100%, such as Burlington Northern Santa Fe, the largest railroad company, which was an acquisition done a decade ago for $60 billion. So today its enterprise value in the private market is probably well into the 100 or 150 billion. That alone. He owns all of Geico, and he owns like 20 other companies that are pretty large sized companies. So so the Apple represented at one point 50% roughly of his publicly traded portfolio, not the entire Berkshire Hathaway. And I think that I think you hit it there too, where I don't think he's just simply finding a lot of attractive opportunities in the market. I think he's in cash preservation mode. And I think the move he made in Apple is just part of that, right? Take some chips off the table, build some cash reserve, because there will be opportunities down the road much better than what he's spotting today.
Jaguar, we touched on it a little bit, but Greg Abel possibly being the next CEO, and we were kind of talking there that we don't necessarily know specifically that crazy amount about him. We also, yeah, just I kind of want to know your thoughts on Greg Abel, the fact that he might be the de facto next CEO of Berkshire Hathaway. It looks like it's going that way, and how you might look into him if to kind of keep that confidence, because there was even some comments from Buffett during, and we'll get into it, that he's definitely been slowing down, which I mean you would expect from a guy who's 93 years old, and to be able to speak for 6 hours it is impressive at that point. But still, it's closer to the end than not, unfortunately. And if you're buying Berkshire Hathaway here for a 10-year plus time frame, you have to have faith in who's ever in line to be that next CEO. So have you looked into Greg Abel at all? Do you plan to do it a little bit more in the next couple days and weeks if you haven't?
Look, just like Warren Buffett has been one of the greatest stock pickers in the market, right? His entire life, 70 plus years. He is one of the most brilliant minds, and he has a very specific ways of going about it. He likes to buy things where it's not the broken companies, but broken stocks. He looks for deals when good companies become broken stocks, and that's when he step in, especially in those areas that have strong moat, right? And because they bounce back the hardest as well. I sort of think that a guy with that talent and an incredible history of performance for making money for himself and millions of shareholders over the years and over the decades is picking his team exactly the same way. And he wants managers after him that can carry on this legacy with exactly the same approach as he applied with Charlie Munger during all these decades. If he has high confidence in Abel, I have absolutely no reason to doubt it. Just like if he has high confidence in putting a CEO in charge of running Burlington Northern Santa Fe, and if he has confidence in running Coca-Cola, if he has confidence in appointing the board of directors in many of the companies that he owns that can do the right job the right way, or really all of those companies and portfolio companies that he has, the same exact way. I think he has confidence in Abel, who can carry Berkshire Hathaway in the same way as he did with Charlie Munger, and I'm absolutely have no doubt about it. So that's what I would say to that. You have to believe in the guy. You have to believe his history and the legacy he's leaving behind, and I think that's going to continue even after him. And that's how I approach this. Now, specifically to Abel himself, I do not know much about him. This is something that I do want to read and fully understand, but I'm going to just go with just the impeccable leadership that Warren Buffett has in all of his portfolio companies as well as Berkshire Hathaway. So that's how I would go with. But as far as that individual personality is concerned and his approach to many things, I don't think it's going to deviate much from Berkshire Hathaway's legacy or Warren Buffett's legacy. But I do have to read up on him and just kind of it'll be interesting times in the future as to what direction the company unfolds, basically.
Yep, those are some good points there. There was a little bit more language from Warren Buffett. Again, like, I don't know what people would expect, but there's definitely been more language from Buffett talking on this one. Like, hey, sorry, I was getting a phone call there. I don't know exactly where I cut off, but there was a lot more language from Warren Buffett here talking about how he's closer to just not really being the CEO anymore is, I guess, the way we'll word that one. But he was saying that he just can't get it done in the day as much as he was able to in the past. Sorry. I'm getting a notification on my phone, and it was a little hard to speak and read that at the same time.
Well, at one point, yeah. And at one point, he said he called. In fact, in so many different sound bites, he called Charlie Munger the architect, right? And he, at one point, it was interesting to watch him when he said that, you know, I think he gave an example of a television where you press the button, the TV turns on, right? And Warren Buffett only cared about whether it's turning on or turning off, right? But Charlie Munger was the type of a guy who wants to know how it's turning on, what's happening behind the button, and something like that. I'm paraphrasing this entire thing when he said basically Charlie Munger was one of those things who wants to get into the process of things to understand how things actually happen rather than just the outcome of it. And so, if you do not have that architect, that brain in the company anymore, right? I mean, I think there is something to be said that is there a replacement for it? Is there somebody, we could maybe argue sitting here that Abel is going to be the guy that is going to take over what Warren Buffett, is today to Berkshire Hathaway. But what about Charlie Munger? Who is that architect now in Berkshire Hathaway? That is the part that I was most interested in finding out in many of the sound bites, but I'm not sure exactly if we have that yet. Something that that I walked away from the shareholder meeting yesterday.
I think that does bring up the point around succession and just in general. You have to have multiple people at a company. You have to have a lot of top talent. This is a company, I think they only have like 30 to 50 actual employees there. But this will be a very interesting tale that I'm sure is going to be in some business reviews on how you hand over a $500 billion company with an all-star CEO and an all-star co-chairman, just person below him, second right-hand man. And I think that's a story that we're going to end up having to see over the next couple of years. It definitely does throw some clouded doubt over the Berkshire Hathaway stock in the more 10-year time frame. And I think you do bring up some good points there, Jaguars. I don't know if we heard who's who's the next Charlie Munger? It's hard to directly replace him, obviously, but who's the next person who can start to take that architect role? And maybe that is Greg Abel at the end of the day, but it's definitely one we have to keep an eye on. And I really do think we're going to look back on a couple like business school reviews of the next 5 years or so. We're probably in that time period right now for Berkshire Hathaway.
Over so many years, I've been in the market for a good 25 plus years now, but I can tell you that there have been times. It was in the 1990s. It was during the dot-com phase. It was then also in the first decade of the century. And then in the second decade, which was in the last one, when we had significant amount of progress in the tech space, particularly led by cloud and the app economy, right? That had a massive impact on how we interact with technology, how we consume products and services as consumers all around us. And so where I'm going with this is that over the years, there have been a lot of criticism, actually, whether Warren Buffett and Charlie Munger's approach to running Berkshire Hathaway had enough flexibility to take advantage of new mega trends that emerged during the past 20, 25 years. And because he basically stayed out of tech this entire time. I mean, if you think about this, aside from taking a position in perhaps the most depressed values in the market, such as IBM and then Apple, what else, if anything at all, did he actually dabble into within the tech space in the past 20, 25 years, right? There was a little bit of a moment in Taiwan Semi, but that's about it, and he's out of that position too. So he has never been a tech investor at all in a very long period of time. And if you go back and if you just look at the relative performance of Berkshire Hathaway, particularly in the past decade before pandemic, for a very long period of time, like almost 10 years, he actually underperformed the market rather significantly and so for those very reasons, because he stayed out of Google and the Amazon and the Apple at that time, with the app economy and many things else. So I wonder whether there's going to be changes in Berkshire going forward, or his legacy will continue looking for those deep values, big moat, high free cash flow, sustainable positions. He loves buybacks, he loves dividends, and he does not mind a company growing at only single-digit percentage, or maybe not even growing at all, as long as the company is, producing 15-20% free cash flow yield and returning that cash to shareholders in the form of dividends and buybacks. And that's what's basically, in the portfolio this entire time. I wonder if that legacy will continue after Charlie Munger and in the future leadership of Abel, or whether there's going to be changes to recognize some sea changes when we observe them in the market, and that have profound impact on the society and the technology and how consumers interact with those technologies and become household things like computers and smartphones and everything that we do around us.
Mm-hmm. Yeah, not being a tech investor over the last couple of years definitely can be a little bit tough. But I'm looking at some of the chats that I'm getting. A Bunk 10 said Berkshire Hathaway needs a new face to be the front of the company. Abel should be the chairman, and they should get a younger CEO. They should look for people from like Excel or Nextera Technology, whatever. Interesting one. But what do you think? Does Greg Abel seems like he's a really good manager of businesses, but does Berkshire Hathaway need a kind of superstar investor who can? It's tough to take over Warren Buffett's shoes, but do you think that they need an outside hire for this?
No, actually, I don't. I disagree with that. I think, again, I'll go back to the point that I made earlier, that what has made Berkshire Hathaway... Thank you, buddy. I'll be just there in just a second. That was my son. What has been the backbone of Berkshire Hathaway? It is the um, it is that just incredible, unique leadership of Warren Buffett and Charlie Munger to spot strengths in the managers and to put them in charge to run businesses in ways that can continue to produce high amount of free cash flow for a long period of time, right? He picks his investments and his managers with a very unique style, and I don't think he wants to deviate from that at all. I mean, if you followed Berkshire Hathaway at all, you would know this. Why would he bring anyone from outside? Abel is the guy. If he's endorsing the guy, then Abel is the guy. Now there could be more new managers on top of it, aside from Abel, which is goes back to the point I was making that who is the architect? That's the one piece that is missing. Who's going to replace Charlie Munger, right, in the future? Who's that architect? We do not know. But I don't think he wants to change the culture. I think he wants to preserve the way it has always been. And I think he's going to look for promotions within the company to continue on the legacy that he's leaving behind. And for now, the one person that we know is Abel, and I think that's the guy that's going to be. If that changes in the future, I have high confidence that Warren Buffett will only make good choices in terms of who should be in charge of the company.
Yeah, that will be an interesting one to watch. The other comment from Jason Elliott: do you think the large Apple sale indicates an expectation of impending market stress and a desire to have massive cash stores, or an indication of a near-term large investment? Now, the Apple Berkshire Hathaway does not have to sell anything to buy something else. They have plenty of cash, so I don't think that it's the specifically for something else. But I think in general, the wanting the large cash pile, we've talked about this, is part of that Apple sale. I also think the taxes and the thought that long term capital gains tax rate will go up is the other one there. But yeah, there was a couple other things I thought was interesting on that topic there, Jaguar. Berkshire Hathaway is still building a position in a secret stock. They asked the SEC to allow them to not include a stock that they're planning to build a large position in on their 13F. It has now been multiple quarters, and we still don't know what it is. I did hear some talks from CNBC saying that we think it's in there, or at least they sounded to know that it was in the kind of financials, banking part of the world. Maybe fintech, probably not, but just in general in that banking side of the discussion. Have you had any thoughts around what the stock could be and kind of why, or is this one we're just waiting and seeing?
And we're waiting to see. He loves financials, as we know, right? He's a big buyer always. He's always been very active in financials, and I would include insurance in that. He's always been very active in his life in consumer products, basically staples category, right? He has over the years made many investments in that area. Sometimes just going solo on his own. Sometimes even doing partnerships where, with other money managers, basically taking a large stake and then, looking not only for that turnaround, but also a position from strength to command the company in the right direction in terms of growth and free cash flow generation and all of that. So those two have always been the most popular parts, but then also he's always been big in industrials. I mean, and I combine in that transportation, so that's where the Santa Fe, Burlington Northern Santa Fe investment comes in. I don't know, Evan, if you've ever played this game or not, but it's a very, very old 50, 60-year-old game from Hasbro, which is discontinued. They don't publish it. They don't produce this board game anymore. But the name of the game is called Rail Baron. Rail Baron. Now, there are different variations of it you can probably find, but I played this game, Rail Baron, and it's funny just to point that out that, this is a game of basically monopolizing the map. And you, just like Monopoly, you want to buy rail assets that gives you access from East Coast to the West Coast. Not only they make the full connection, but then also become sole monopolies in certain high, powerful economic districts of the economy on the map. where everybody pays your rent if they're going to basically travel on your railroad. And those rents can add up to massive, and you're the sole, person that owns the whole territory. When he made that investment more than 10 years ago, that's when I had, suddenly, I had a very high appreciation for what Warren Buffett really is. When he bought Burlington Northern Santa Fe, knowing from that game where BNSF is on the Rail Baron game, and how it connects from Chicago down to the southwest. And I just knew that he just hit a home run. And even though he was paying $60-some billion for it, this is an asset to own, just knowing from that game. So it tells you exactly the type of person he is and where he invests. So going back to your question, what kind of investment he could be building, I don't know. Could be another railroad, right? Could be Canadian Pacific, could be in the railroad, could be many different things. It's really impossible to know, but I think his favorite areas have always been, because he's always been of the view, never bet against America, right? And so he wants to own the assets in America that will be there forever. And so railroads, in the transportation, large banks and insurance companies, and large staples, consumer staples.
There was some language around the railroads on this one where he was talking about how they're not the most amazing businesses in the world, that they're stable and stuff like that. He kind of had a line there where he was like, well, they're still businesses, which I think they're still interested in. I don't know if what I was hearing though in the way he was talking about the railroads yesterday, if he's as interested in increasing those holdings there. He didn't really get too many direct questions after that one, but he definitely was a little bit more reserved on that business than some other ones I've heard him talk about, which I did think was a little bit interesting, kind of showing how different they were. But he did still use language like, but they are still businesses and still ones that could do well. He also didn't have the most positive things in the world to say about insurance the entire time. Although, in general, obviously, Berkshire Hathaway is a juggernaut in the insurance space. They own Geico, for anyone who doesn't know, and they own a lot of other stuff. So, there was some disparaging remarks about Tesla's foray into insurance. They were talking about how it's more difficult than a lot of times it meets the eye, and one of them up there, not Buffett, was talking about how Tesla is struggling and he's not been impressed by what they've done so far. So some intriguing language there.
Well, I think first of all, he has been investing in insurance his entire life, right? I mean, again, if you go back to his very early days, and I'm going to paraphrase this too because I don't know exactly what happened, but there's a story about him when I think he was maybe 17, 18 years old, but I don't exactly know, but where he went to Geico office and he asked the receptionist that he wants to see the CEO, and he had to wait in the waiting room the entire day. That finally he got a chance to speak to him, and he went in there as young, adult, I guess, and he just went in there and he asked the CEO, "What is insurance business? Can you explain it to me?" And the CEO of Geico was like, oh, wow, this young guy basically walks in, he wants to know what is insurance business. So they had a really nice talk. And then multiple years later, Warren Buffett basically bought Geico Insurance. And ever since then, he owns the company. So he has invested in so many insurance products, reinsurance too, right? Gen Re and many others, all over the world, not just in the U.S., all over the world. And he has done tremendous in those investments over the years. So would not surprise me if this is just one of those big angles as well, where he is looking at more opportunities in that spot. And tying this to Tesla, the problem that is for a guy like this, for insurance business to be highly successful, you have to be able to basically open up to all markets or majority of the markets. I mean, Tesla sells insurance to guys that buy a Tesla car. how big is that market when you think about it in terms of being able to scope it out into much larger territory within the automobile segment when you are basically selling insurance to one type of car manufacturer, auto manufacturer. So just rambling over here, but I think that this is yet again another thing about Warren Buffett. I would not bet against this guy. He knows probably insurance better than anyone else that we can think of. I have to say, Evan, I have a hard stop at 11:55 Eastern time, so that's about in 12 minutes from now, as I have to get on the road to go someplace else. But just wanted to let you know.
Yeah, no, I appreciate you joining in for the time we have you. This has been a great chat so far, and yeah, always appreciate the time. Were there any kind of, I mean, I have a couple more talking prompts here. There was the America First comment. There was comments around what stocks Charlie Munger has talked to Warren Buffett about, and that kind of led to Buffett saying he maybe regrets not buying Costco a little bit, and a couple other comments that I found to be interesting. But what did you think was the biggest thing, or one of the most interesting things that we haven't talked about yet?
Sorry, Evan, about that. I'm sorry. Can you please repeat that again? I had a daughter in my
No,
my daughter in my
no,
office.
totally, no worries. Understand, family first too. So I definitely do respect that hard stop that you got coming up. But yeah, no, I just wanted to get your thoughts in general about. You kind of came in here and AI was the first thing you talked about. Another one, so maybe that was your biggest takeaway. But was there any ones that we haven't touched on so far that you came in here wanting to talk about?
No. Look, I will go back to just the just to elaborate on a point that I've been making about Berkshire Hathaway really since the start of the year, January 2nd. I'm going to try to connect this to the AI theme and much else. Many people see the market from a simple lens that has to do with sectors. There are 11 sectors within the S&P, right? And some sectors go in and out of favor all the time, right? When certain areas of the market are going to be favorable while over the others. And finding when the relative strengths and relative weaknesses are actually appearing in front of you, and then riding those relative strengths in the strongest sectors of the S&P 500 index can have a profound impact in the portfolio. That's the most common view of the market, and fully understandable too. But then there is a thing called, which I've talked about multiple times live on Spaces, it's called factor rotation, which is spelled as F as in Frank, ACTOR, factor rotation. And factor rotation has nothing to do with whether you want to own one sector or over the others, like tech over real estate or industrials over banks or something like that. Factor has to do with large over small, high beta over low beta, value over growth, and things of that nature, right? So you could have dispersion of prices of equities within the same sector. Like, for example, within tech sector, you may see low beta, high free cash flow equities within technology sector outperform high beta and low free cash flow, equities. Like we saw a little bit of that in IBM in the past 6 months, where IBM was actually outperforming a very large basket of many of the tech stocks. It has to do with the factor rotation. The reason why I'm bringing this up is because there are times in the market when factor rotation becomes increasingly clear. And the absolute best way to capitalize on that trend, because it could go on for multiple quarters and even years, is to simply own Berkshire Hathaway. This has been quite literally my number one reason for owning Berkshire Hathaway since January 2nd. And I've owned the stock this entire time, but on top of it, I've traded call options ridiculous number of times in the past 4 or 5 months for that very reason. Factor rotation, which is very hard for many people to understand, because they only look at things in terms of one type of stocks versus the other type of stocks, but they don't take into account large over small, preference for large over small, preference for low beta over high beta, preference for high free cash flow versus unprofitable tech, preference for all of those things. The absolute monster best way to bet on that when this happens is Berkshire Hathaway. And so now how to tie this into the semi or just AI in generally speaking. Well, let's be frank about this. And again, this is a unpopular opinion that I have. When you're betting on AI, you're betting on momentum. You're betting on high beta. You're betting on in some cases, depending on what kind of equities you're looking at, a lot of promise, but not a lot of delivery in front of it. Meaning there's a tremendous amount of profits with the CapEx investments that are taking place, but the revenue generation machine of that has not appeared yet, which makes it basically unprofitable, right? With all the investments that are taking place. And so all of that, when those trends start to go out of favor, and the market starts to focus itself into high free cash flow, which has been in display, since the start of the year, even if it has not been clear to everyone. That's when Berkshire outperformed. BRK/B was up 17% in Q1. Think about that for a second. In Q1, Berkshire was up 17%, crushed everyone. It was up 2.5 times the S&P. It was up against every high beta, every momentum, anything that you can think of, except a very small basket, such as NVIDIA maybe, or something else. There's a reason for that. How can a guy, a 93-year-old man, owning things like high free cash flow assets like Occidental and Apple and Union Pacific and See's Chocolate or Candy and things like that, or furniture stores, could be beating by 2.5 times the S&P in Q1. Factor rotation. And I don't think it's done yet. It will continue for a long period of time to come.
Yeah, that is some interesting thoughts there, Jaguar. Appreciate you sharing them, and we've definitely had some factor rotation talks over the years. Are there any sectors that you're surprised Buffett hasn't really gotten into? I know you like to talk about defense a lot, and I don't know if really Warren Buffett's ever made any significant investments in that direction. Obviously, they have big utility plays. I don't know if they're huge in healthcare or med tech or even just the medical side of it in general, but what's your thoughts on the areas that Warren Buffett kind of maybe feel similar to this type of stuff that he like but doesn't get into? I know defense and biotech and just in general are big stuff for you that I don't know how much Warren Buffett has. Maybe he does.
That's a fantastic question, and I think you're getting into some of the most important areas of the market that I have pondered myself too. How come Warren Buffett doesn't have bigger exposure to these areas? Because they fit his style and they give him exactly what he has always looked for. And he's underexposed to some of these areas. Healthcare definitely there, but then also defense. I mean, anybody can just pull up the earnings report from Lockheed Martin to Northrop Grumman and can find the trends globally in almost every economy as to what the defense spending trends are and at what CAGR this will continue for many years to come. And the valuation multiples are in the low teens, double-digit free cash flow yields in most cases or high single digits. It fits in perfectly. The only healthcare stock that I know that Warren Buffett has always been a fan of is DaVita, symbol DVA. There may be other side investments, much smaller.
You know what one? Actually, now you said it, Teva Pharmaceutical was another one that he was in for a while.
Yeah, there you go. So it's not like he has never made, investments in the healthcare. And as a value guy, he has. But I think that especially at this time, there are just too many to find. From Merck to Pfizer even, I would throw into that mix, although Pfizer has no growth, but then many other large pharmaceutical companies, So I do think that there are spots that fits as a style, particularly in healthcare and defense, but he has not been very aggressive in those two areas. Not exactly sure why, but I think you have a very valid question there.
All right, Jaguar, we're coming right up on that hard stop. Um, so appreciate you being on here. I do think that the biggest my biggest takeaways from this one, and at least that I am the most curious to talk about with you in future spaces, is Greg Abel and the whole succession part of this, of what Berkshire Hathaway looks like in 5 to 10 years from now. Hopefully it's 10 to 15. Maybe Buffett goes for the 100 and goes past it. But I definitely think those thoughts are starting to be had, given some of the language that Buffett was using in general about him pulling back, about the managers don't really call him anymore. They call Greg. So I think that even with just everything that's been going on, I think it starts to make you think a little bit more about the future of it. So I'm excited to dig more into Greg Abel and see what type of information I can find, and definitely some discussions that I know we're going to need to have in the future.
Absolutely, this is only going to become increasingly important too, right? I mean, all investments and cash pile and all of this aside, who are the new managers? What are their approaches to evaluating investment opportunities? Their time frames, and how are they different, if any way at all, from Warren Buffett and Charlie Munger? I think Abel is right in the middle of all of that discussion. It's going to only become increasingly more important. So definitely, let's have some of that discussion in the future sometime.
Awesome. Appreciate you, Jaguar.
Thank you very much for having me here, Evan, and everybody else. Hope to catch you again in some other spaces sometime.
Yeah, everyone should make sure they are following Jaguar. A fantastic follow, and will improve your experience on X. Fantastic person, always smart guy. I love having these chats, Jaguar. Awesome. Appreciate you, good sir. All right. I'm going to keep this going for a little bit longer, and we'll see if anyone else comes in and joins us, and how the conversation goes. Obviously, that was a great start to this with Jaguar. And also, for anyone who doesn't know, I am actually live streaming this on YouTube as well. So if you want to, as a part of this conversation, see my screen, go into the link pinned up in the nest above and join that live stream, and we'll talk about all that stuff. But yeah, come in, join up, say hi in the chat, and make sure to subscribe to the YouTube channel while you're here. But I want to talk through, just going through my timeline and some of the biggest stuff that I was tweeting about yesterday, and just my general thoughts on what Buffett said. He spoke for 6+ hours. So for anyone who did miss a little bit of it, that is totally understandable. Truthfully, there's an immense amount of value in listening to Buffett. I really do truly believe that. It's probably a solid 2 hours if it's a condensed version of it. But here we are, 6+ hours, can't complain, and being able to learn from some of the stuff that he's saying is always really great. Just recapping through everything, the big story at the start of this, when we first got the release, there was two things. One, and they actually kind of linked together. One of them was Apple. Warren Buffett and Berkshire Hathaway sold 13% of its Apple holdings in Q1, or at least they decreased their investment by 13%. Numbers can be a little bit weird because math. But they now own about 790 million shares, down from 905.6 million shares as of the end of last quarter. That brings the value of those shares to right around $135.4 billion. Still a significant amount of money, but they obviously owned a good little bit more. The reasons that were kind of given and thought around why that might have happened, I had two main ones that I got out of it. First of all was on the other major story of the morning was around their cash pile. Berkshire Hathaway ended Q1 with basically $189 billion, $189 billion, and he said that it is a reasonable assumption to think that they're going to have over $200 billion of cash by the end of Q2. Buffett was talking about how just in general, he doesn't mind, given the market conditions, building that cash position. He was talking about the 5.4% rate that he's able to get right now. All of us in our high yield savings accounts are happy with mid fours. 5 is probably where like the competitive landscape is right now. But Warren Buffett with billions of dollars is out here getting 5.4% probably, maybe even 5.5% would be wild. but wouldn't be surprised. But he even did make a weird comment that was, he said, don't tell Jerome Powell, but I would still be as interested in cash at 1 or 2% rates, which does say a lot about his opinion in the general market and where valuations are at right now. But that was part one of a reason that I think that we'll go into of why he sold some Apple shares. But I also think that part two was a talk around taxes. Warren Buffett said that he thinks that long-term capital gains taxes will be going up over the next couple years. He didn't really give an area on when, but I think that gives some insights into possibly why they might have sold some of their Apple shares. Being able to pay the 21%. He was talking about how just a couple years ago, the max long-term capital gains tax rate was closer to 35%, and it's been higher in the past. He seemed to think that it will be going higher, which could tell you maybe some of the reasoning as to why they sold those Apple shares. He did say that he expects Apple to continue being their largest holding for many, many years to come. He seemed to hint that Greg Abel will be the person who he wants to take over as CEO, and that Greg will keep those shares there. So yeah, I think the worst case scenario in my mind that I'm putting together here is that this sale shows a lack of conviction. I don't know if that's the correct word, the lack of wanting Apple to be a 40-50% of its equity portfolio, probably 15-20% of the total valuation. And it's probably actually closer down to like 10-15% of the valuation of Berkshire Hathaway, that he doesn't feel so comfortable in that from a capital allocation standpoint, and maybe wants to diversify some of that around. And I think then you would maybe see that continue with Apple being sold down over the years, which when I take off my Apple fanboy hat, that's maybe the direction I'm leaning towards. But for now, I think that selling some, taking that long-term capital gains tax at 20-21%, whatever they're paying right now, is significantly better than the 30-35% that might be coming soon. So I think that was definitely in this Buffett sale of Apple. It definitely had at least some play into it. There was talks around what stocks that Warren Buffett, let me take a step back. This was the first Berkshire Hathaway annual shareholder meeting without Charlie Munger. There was actually a point when Buffett was speaking and he was done and he was like, what do you think, Charlie? He meant to throw it over to Greg, but he was so used to saying that for so many years. It was a little bit upset to hear that, but he joked about it, and I'm sure... we know Charlie liked to have his quippy remarks, and they always like to keep these things lighthearted, so I'm sure we all would have been laughing in general, but a little sad to see. In general, though, back to where I was going with this one, that he said that Charlie Munger gave him a couple stocks that he really should have pounded the table on. Maybe BYT was one of them, but Costco was the one that he really pointed at as being a regret that Buffett did not buy more into Costco. Brad Christopher in the YouTube chat, by the way, if you do want to throw any comments or questions or have anything you want me to talk about, that tweet up in the nest above, in there's the YouTube chat, and I'm answering all the stuff in there. But Brad Christopher from that YouTube chat says Warren still learning late in life about Paramount, with that being an expensive loss. So what he is talking about there, Warren Buffett said during the quarter that Berkshire Hathaway sold its Paramount stake, and they quote unquote lost quite a bit of money. Warren Buffett said multiple times that he was the sole person to blame with those Paramount losses, but I don't know how much I believe that. We do know that at where Warren Buffett is in his life, he can have a loss or two, and his reputation would not be tarnished. No one's going to ditch Berkshire Hathaway because Warren Buffett made a mistake on Paramount. And when you have so many winners, no one's going to win every single time. And when you have some really massive winners that can outweigh the some small to medium-sized losers, you can really go a long way. But point being, Warren Buffett's reputation is firmly intact. No one is going to take anything away from that. But Greg Abel, someone who will be or is expected to take over as the new CEO and main capital allocator at Berkshire Hathaway, can't afford that much of a loss compared to what Warren Buffett could. So I have no insights into it, but just from my thoughts around it and what I would do in that situation, I do think it makes sense for Warren Buffett to take some of the blame away from Greg Abel around that, and anyone else who's involved with Paramount. But Warren Buffett did make a very, very concerted effort to say it was him. He said it 3-4 times or whatever, that it was all him. And like I said, how much do we believe that is a question we need to ask ourselves? I don't buy it. I think that Greg Abel and some of the other people there at Berkshire Hathaway definitely did have a say in what happened over there. As I continue digging through back where I was on my timeline, Warren Buffett was asked about China, Canada, the U.S., Japan, etc. So a couple different areas around the world. Around the China part of the question, this is kind of what sparked all of it. He was asked about investing in Hong Kong and China and that part of the world, and he kind of batted it away a little bit. He was talking about how at that point he said that the primary investments will always be in the United States. If we, meaning Berkshire Hathaway, do something really big, it's extremely likely to be in the United States. He did talk up his investment a little bit in Japan that they've made recently, which has done very well for Berkshire Hathaway. So they've had some good experiences internationally. And then he was also asked specifically about Canada and a possible investment there. He talked well about it. He seemed open to it. He said that they might even be looking at one Canadian investment right now. So keep an eye in that direction. He seemed to bat away China and talked more about the United States. Talked about how he doesn't have the best handle and grip on cultures internationally, and going back to a saying that we know from Buffett a lot of, investing in what you know. And he was talking about that he really knows and understands the U.S. Consumer and the U.S. market, and less so some of these international markets. So I don't know if it's a kind of conviction on, or a lack of conviction on specific markets, but I think it may be more of a lack of knowledge and knowing what you know and knowing what you don't know. And Buffett's a big proponent on investing in what you know. So I think at this point, it just makes sense for all of his thoughts and investments to be heading more in the U.S. direction, somewhere that he knows. But Canada, I guess the proximity to the U.S. has made it very similar markets in a lot of ways, and they have some experience there, so maybe he's a little bit more open to a Canadian investment. But I would say don't expect Warren Buffett and Berkshire Hathaway at this point in time to make some serious investments in markets that they don't fully understand. It sounds like the Japan one might be a little bit more of a exception to the rule than a new rule being set. But like we said, Berkshire Hathaway is closer than not to a change coming, and we don't necessarily know what Greg Abel thinks. 1 second. Quick water sip. Awesome. All right, continuing on. Like I said, there was a moment in time during this where Warren Buffett wanted to, it was so used to throwing it over to Charlie Munger that he gave his whole point. He meant to throw it over to Greg, but he said, "What do you think, Charlie?" Which was, it was laughed about up there, but it was a little bit of a sad moment, kind of hitting in the fact that this is the first annual shareholder meeting without Charlie Munger. And we were talking about it with Jaguar. A big thing and a big conversation right now, and I think will be the conversation around Berkshire Hathaway over the next couple of years, is succession and what the next couple decades look like for Berkshire Hathaway. So I think one thing that Jaguar did bring up, Charlie Munger was talked about a lot during this annual shareholder meeting as the architect of a lot of what happened at Berkshire Hathaway over the last couple of years. And we've talked about the capital allocator that Greg, it's tough to walk into Warren Buffett's shoes, but it seems like he has the utmost confidence in him to come in and take over and at least get you going in the right direction. You know, when you have a $200 billion cash pile, a $800 to $900 billion company that is firing on all cylinders, when you have decades of experience of running and having managers directly come to you and being able to handle that, I think it gives you some leeway to make a mistake or two. Much more leeway than when if you're just starting out with a tiny portfolio and you have to do everything yourselves. So I think that Greg Abel will be given an advantage. Hopefully he gets the time to make a mistake or two, because that's inevitably going to happen. And he really probably needs his one big winner, at least that first big winner to come very early on, which I own a tiny bit of Berkshire Hathaway, and I'm down to root for it. But point being that kind of started all this is we don't know if we have the Charlie Munger to the Warren Buffett. If Greg Abel has that person who can be the second in command, take over as an architect, as of Berkshire Hathaway. And there was someone who asked about if Berkshire Hathaway needs a new CEO, someone or a new architect or something like that to come in. And I did think Jaguar's comments around it was fascinating. That Warren Buffett has built this thing with trust, with the ability to surround himself by really smart people who know what they're doing, and you kind of have to have faith that he's able to continue doing that. So I think Greg has at least got himself getting the backing of Warren Buffett. I'm sure is not an easy one, and definitely gives him a little bit of leeway at the start, but that could be run through pretty quickly if it's not loved. But I hope for his sake that he gets that first big win early on, and that can be a big thing for him. But succession will end up being a big conversation, and that was a big conversation of this shareholder meeting. I'd be excited to hear more of Greg Abel over the next couple of years as a Berkshire Hathaway shareholder. It's still definitely a Warren Buffett shareholder meeting, and I love to hear his wisdom, and I think it's important to get that. But from a Berkshire Hathaway perspective, it's probably very much needed to hear Greg Abel talk more, to understand his thinking and get excited about some of the stocks. I would love to hear. On this one, we had Warren Buffett saying that Paramount buy was all him, all him, all him. Like I said, I don't know how much we believe that, but it would be very nice to hear Greg Abel take his hand up and say, I am making this investment. This is what I think. And putting himself out there a little bit and giving himself that opportunity to get that first real big winner while he has the backdrop of a Warren Buffett still behind him to kind of help with the transition there. I see a nice little bump on the YouTube live listeners. So if you're on the YouTube stream right now, make sure you're subscribed to the channel if you enjoy these type of live streams of seeing my screen. And if you're on the Spaces one more time, go over to that link up in the nest above and join that YouTube live stream. Trying to do it more. YouTube is a big goal of mine right now going forward, and I'm going to continue doing it. Maybe I start live streaming my screen on X and try and do that live button, but I enjoy the ability of Spaces where I can have just people naturally join into the conversation. Like we have an Emperor Door down there. If he does want to come up, would love to hear his thoughts, anything he wants to add into the conversation. But that's my favorite part about this. So I probably will end up choosing Spaces over anything else, but we shall see. But yeah, join that YouTube live stream up in the nest above. Subscribe to the channel, ask a question in the live chat, and I will answer it. Why do you shadow ban people on your channels is a question I just got in the YouTube chat. I don't think it's possible for me to shadow ban people. I think that's a platform specific thing, but no, I do not shadow ban people. Sometimes I won't lie to you. If you make a mean comment, I don't care that much, but I've put a lot of effort into this. So do I want some people to not get the value that I think I deliver, especially I deliver for free? Yeah, from time to time. But no shadow banning people. You guys can comment everything you want generally, and 99.999% of the times I don't block anybody. Do not restrict anyone. All right, there was a couple comments around Warren Buffett and about opportunities in the market. We've talked about that a little bit, but I thought this quote was interesting. Now here is the quote. There have been times in my life that I've been awash in so many opportunities that I could have invested everything by nightfall. And then there's other times, basically he was saying like right now, that's when we just haven't seen anything that makes sense that moves the needle. So I think there's two parts into there. We kind of touched on this earlier, that he doesn't see a crazy amount of opportunities out there right now, and this is part of the sale that he's doing in Apple. Although they are deploying a little bit of cash, they have that multi-billion-dollar secret holding that we don't know about yet. He talked about a Canadian opportunity that they're interested in. They obviously made the Japan investment within the last couple of years. Sorry, this guy keeps commenting. No idea what he's talking about. But I think this goes back to the Apple conversation, part of that sale there, and right now that he doesn't see as many opportunities out there as he has in the past. I thought the AI comment was one that I definitely want to touch on and make sure I'm getting that correctly. Let's see. This was the direct Warren Buffett quote, again, around AI. The quote is, if I was interested in investing in scamming people, AI is going to be the growth industry of all time. Obviously, AI has the potential for good things too. As someone who doesn't understand a damn thing about it, it has enormous potential for good and an enormous potential for harm. So, Buffett's thoughts around. One second, let's reply to this guy in the chat. There you go. If you want to talk shit, I guess do it in the YouTube live chat, and you'll get me to stop my train of thought and answer. But what was I saying around the AI conversation? So Warren Buffett said multiple times that he really does not know or understand AI that much, which makes sense. Warren Buffett, as we're talking about, has never really been a tech investor. He's invested in Apple. He's invested in IBM. There was some investment through Berkshire Hathaway and Amazon and Taiwan Semi, but we do know Warren Buffett, that's not an industry that he really goes in and does all his homework in and is able to understand, which I guess makes sense for a 93-year-old guy. I think it's very impressive what he's able to do, and it doesn't surprise me that AI and tech is not an area in that. But the one comment that he did give around it, besides I don't know, was he had recently seen a deep fake on the internet of himself talking, and I don't know if it was giving a recommendation or whatever, but he knew that clip wasn't him, and he was saying that if he didn't know that for sure, he would have believed it. And that got him talking about the worries around scamming and phishing and the possibility of using stuff and the NIL, the name, image, and likeness of these different people to scam others, which obviously you could see as an issue. And Warren Buffett talking about it, I'm sure we'll have a couple people in the cybersecurity space on Monday touching it and seeing their thoughts and about what the future could look like. But Warren Buffett was definitely a little bit concerned about that. I do think that everything in that commentary should be viewed from the standpoint that he did say multiple times that he does not understand AI, doesn't know AI, doesn't pretend to. That type of language, you could take it what you want. I think it makes sense given where he is in life and how he has invested and the type of names he has invested in. But Warren Buffett is a little scared of AI. Well, that's to say the least. All right, there was a couple other comments around it. Warren Buffett, for them selling Apple, we know I am an Apple fanboy. It's my largest holding. For him selling Apple, I'm happy that we got one or two positive comments about it. He did say that he thinks Apple's iPhone may have been the greatest product of all time. Yeah, so, hey, I'm all for him saying that it's the greatest product of all time, and hopefully it continues to be. There was also talks around how much Berkshire Hathaway pays in taxes, and if you didn't see it, do a 5-second pause here and let you try and guess it. But they ended up paying more than $5 billion in taxes last year. Warren Buffett was talking about, what, 60, 80 companies paid as much as them, then a lot of the tax deficit problems would be solved, although probably end up just spending more money. But yeah, they are paying aggressively in taxes. And I think this also does, I'm telling you, I really think this goes back to part of the reason they sold Apple was... Part of the reason they sold Apple was around the fact that they think that the capital gains tax rate, the long-term capital gains tax rate, is going to increase in the next couple of years, and at the scale of billions of dollars in which they're selling at, a 10-15% increase in paying taxes there could make a big difference. I will say Warren Buffett literally did say at some point during this as well that, hey, I think people spend too much time focused on not paying taxes, but I maybe it's copia, maybe it's whatever. I think that's part of the reason that they didn't sell, that they did sell the Apple shares the other day, was some tax reasons. But I digress. Could be copium, as I'm saying. But yeah, that was a lot of those ones. That's pretty much everything I tweeted out. Let's double check. Yeah, I think that's a good bit of that one. I did think a couple other people really did a great job, and I actually did DM a couple of them to come on either this space or one later in the week. The transcripts, Q Compounding, and who was the other one? Compound 248 all did good jobs, but I am on Q Compounding's page right now and digging through the thread that he did yesterday. He was there and he basically gave 100 bullet points, which was an interesting one. You can go to his page; it has 760,000 views on it. This thread, but he gave 100 different thoughts and takeaways from the shareholder meeting. So let's dig through a couple of those. Yeah, there was a big tribute to Charlie Munger at the start. I don't know if anyone saw it or missed it. You look up the Breaking Bad Charlie Munger commercial if there's a way that you could find it. It was pretty funny. Warren Buffett was doing a skit with the people from Breaking Bad, and he basically threw it over, and all Charlie Munger says is, I remember brittle bitches was a direct quote from Charlie Munger, and there was another comment that I thought was funny, but slipping my mind right now. I actually wrote it down. Let's see if I can find it. His direct quote was "Slick yo, brittle bitches." That is what I heard Charlie Munger say on that skit, which did make me laugh. I love the quippy remarks, and we at least got one of them from this annual shareholder meeting, which always makes you feel a little bit good. I also thought it was nice that the only books, so generally they sell a bunch of investing books that Warren Buffett enjoys. He's a big reader and a big proponent of it. At the shareholder meeting, and this year the only one they had was Charlie Munger's book, which I thought was nice. Comments around insurance. Insurance is the most important business for Berkshire Hathaway. So even what I was saying earlier that he maybe didn't sound too excited and happy about the insurance business, comments like this are important. Think on the long term. You can't create a baby in 1 month by making 6 women pregnant. We have heard that quote before, got to use it again. He even mentioned that he doesn't think his daughter likes it. But yeah, Berkshire Hathaway earns more than $100 million per day currently. Quick water sip. But that is quite a big number. We have the comment in the Charlie Munger tribute video, I believe. But it was that every time you see the word EBITDA, you should replace it with bullshit earnings. There you go. Solid quote there. That was always one of the better ones. It takes character to sit there. I didn't get to where... So it takes character to sit there with all that cash and do nothing. I didn't get to where I am by going after mediocre opportunities. Warren Buffett talking about the patience that they have in building this cash portfolio. I'm sure he's seen some okay opportunities. I see your comment, Emp. I appreciate you hanging out and chilling. Any point, just unmute and I'll stop talking and get you into the conversation if you have that moment. But appreciate you hanging out. You should say hi in the YouTube live chat as well. Always surround yourself with people you look up to and trust. That was definitely a big conversation around this. Obviously, like we said a couple times, this was the first annual shareholder meeting without Charlie Munger, and there was a couple questions around it. A kid asked if Warren Buffett had one more day with Charlie Munger, what would they do? And I feel like, as you would expect, he kind of talked about just looking at stocks, talking, just general talk about business and markets and yeah, and we've gotten a lot of really great outcomes out of those type of conversations, so I'm sure we would all want that. He talked a lot of good stuff about Charlie Munger during our entire partnership. Charlie never lied to me once was a direct quote. He was talking about how Charlie Munger really was able to know people and understand what makes them tick and what's ways to persuade people, but he also talked about how Charlie Munger never really used those and was ashamed of it when he did. So definitely only good stuff was said about Charlie Munger during this one. Warren Buffett, we continue on in this thread. He was saying that he is smarter now than he was a couple years ago. Even if he is pulling back a little bit, he is a big thing during this shareholder meeting was kind of being a lifelong learner, never stopping, always trying to improve yourself, and those type of quotes there continue on. In the very long term, the stock market always goes up. Always a good one. It is true. When we talk about the stock market, the S&P 500, the NASDAQ 100, these broad-based market indexes that rebalance over time, that kick out the bad stocks, the losers, that take in new winners, those devices are really meant to go up over time. At least they have over the last little bit. Individual stocks don't go up, all of them. Just look at Peloton and a few others like that have definitely struggled. But Warren Buffett is a big believer of time in the market beating timing the market. And he continues to kind of give that type of language out here. There was a lot of conversation around just kind of life advice and all that good stuff. To lead a productive life, do what you love. The best time to sell a wonderful company is company is almost never. Kind of the only reasons is if the story changes, he was talking about, if you need the cash, which really never happens to Berkshire Hathaway anyway. They literally have $200 billion in cash. I would love to see their interest income that they get and just being able to get that for a day. I would take it. Their Apple dividend is like $200 million or something for the quarter, so it's quite the hefty dividend. Berkshire Hathaway will keep buying back shares of the company in the years to come. Warren Buffett talked about, let me get this direct quote back in front of me. Quickly. A little further down then. All right. Berkshire Hathaway's core economic goal is to increase operating earnings, one side of it, and decrease shares outstanding. So I think this kind of goes to the point that they will continue to buy back shares. I feel like if he would have been asked directly about Apple's share buyback plan, just given that language there, that he would have approved, but I'm not going to put words into Warren Buffett's mouth. Although, hey, if I could, I would tell him, just say my largest holding is bullish a couple times and help it go up. But that is besides the point. Understanding the psychology of human behavior is crucial. You get very rich by understanding the irrationality of Mr. Market. That is a great saying there. We learned, I at least learned about the efficient market theorem in school, that everything in the market is already priced in, which is difficult to believe when we have just see with the swings and the weirdness that happens in the market every day. But I digress. And in general, those kind of imperfections, word I'm looking for, in the market is really what gives you the opportunity. And the overreactions in human nature in general. So the market is just a massive piece of human psychology. This is one giant social experiment, if anyone doesn't know. And every single time I join this market, I join the spaces every single day, I think that more and more. So yeah. Excess cash will always be saved in U.S. Treasuries. Investing is simple but not easy. I think that's a good quote there. A lot of people like to overcomplicate this, and it's not easy, as we're saying there. But it's not rocket science either, and anyone can be successful. You know, there's different types of people in the market. I'm sure we have a lot of really active traders in here with really great strategies, and they're doing immense amount of work. I'm sure we have some really active active investors in here who are looking for those 10x opportunities and those growth investors, and taking their times to dig into so many different reports of small and mid cap companies to find the one that can become a large cap company. And there's probably a lot of people in here who just are very novice to medium investors who are just buying the S&P 500 and NASDAQ 100 and other similar market broad-based indexes. And all of those opportunities are really well. And I think in the stock market, it's really important to understand your time frame, how long you want to be investing for, understanding your goals, understanding how you are able to, how your brain is wired, and from that, picking the style that is right for you. One thing that does scare me a little bit from time to time is when someone who's really active into trading gets burned a little bit, and then they get really thrown off the market, and that upsets me from time to time. Well, one thing I would say is even if you take a big loss in one specific part, whether it's active day trading, swing trading, small mid-cap investing, long-term investing, whatever it is, try something else. You know, you want to make those mistakes when you don't have a lot of money. Some could say you want to make those mistakes on the paper gains market or in the being able to listen to someone else. But yeah, never get fully scared away from the market. At least that's how I feel about it. And I am definitely a fan of a lot of people doing those broad-based market ETFs and indexes. And yeah, that's kind of general thoughts there. Continue looking at this. Cybersecurity insurance is a risky business. Berkshire Hathaway stays away from it for now. It just sounds like a reluctance to jump into something right away, but there was some stuff that I think what they're saying was maybe a $10 billion business right now, that cybersecurity insurance area of it. And they wanted to see it proven that it is a sustainable business going forward. So I think that goes into the ethos of Berkshire Hathaway of not really running into something right away. And And yeah, listen to people with opposing views and ideas. The best businesses have a high return on invested capital and plenty of reinvestment opportunities. Take a simple idea and take it seriously. I'm just reading through a bunch of these. All intelligent investing is value investing. Interesting there. Great managers have one thing in common: they allocate capital well. There was a lot of commentary around capital allocation on this one. It seemed for him that Warren Buffett seems to think that capital allocation is the number one thing there. When he was talking about what the CEO should look like and what they should be doing, that was definitely the area he was jumping to first, was capital allocation. And when he was talking about Greg Abel and his strengths, that was the area he seemed to be going to first. But Christian, I see you joined us up here. Good afternoon. I appreciate you joining in. Did you get the chance to watch the Warren Buffett Berkshire Hathaway annual shareholder meeting yesterday?
Yeah, Evan, I was listening to you, and I just joined in. I did listen to it, and I thought you were making a lot of great points. And I think I just want to, from a high level, like Buffett, Munger not being there is kind of like, it's very sad. I mean, he was one of the funniest, wittiest, smartest men ever. So you could see Buffett kind of struggling up there a little bit, and he's getting a little older. But what I think those meetings do, and whether, like you were saying, whether you're a trader, an investor, I think the life lessons of a man that's lived that long, and you can just see in his words and in his thoughts and what he does, how you can incorporate those things into your life, whether at what stage you are is immaterial, right? Like you could just see the wealth of knowledge that even a man at 93 can sit up there for so many hours and deliver that kind of talk with so many questions coming at him with humor. It's an institution. And I think we should appreciate these moments, because in another year or two, God forbid, Buffett might be not here anymore. And you're right, Greg Abel, I'm just becoming familiar with him. And he was, he seems like a smart guy. He seems like a very reserved guy, but I think he's somebody that could maybe fill those shoes. Not quite, no one could fill the shoes, but I could see him. He understands business, and I think Berkshire it will be in a good spot with him. But I mean, I think these last meetings without Munger, and you see Warren getting older, I think we should cherish them, and I think there's so much value to be gained there. So I thank you for doing the space, and it's been very enjoyable to listen to.
Yeah, no, I appreciate that, and I think succession will end up being the big discussion here over the next couple years, and I really do want to see Greg Abel being more of an active participant in the next couple of shareholder meetings. Now, he was in the spot, he talked a good little bit, and there were some different thoughts going across, but I think we're talking there. I think there's still a lot of questions about what investments are specifically his. I would like to hear one or two times where he's like, yeah, this was me, and we'll see going forward. I would rather see it on something that's like, we're actually making this now and we'll see how it does, as opposed to this was a big winner, this was all me. I don't know, maybe we'll trust it, but I'd rather we have the full proof on that one. But just in general, I think that hearing Greg Abel take a more active role will be extremely important going forward. And I would love to see them try and Ajit, who's the insurance lead there, was kind of the third person up on the stage, and they have Todd and Ted, who are two portfolio managers there. I think they've been managing around $10 billion or some number like that, a significant number. Not as crazy significant in the scale of Berkshire Hathaway, but 10 billion's 10 billion. But I think that we need that architect, that you're never going to be able to replace Charlie Munger, but a second person who can be a foil to Greg Abel seems like something that if they could find it now as opposed to later, might end up being beneficial. But I really do think succession will be one of the big stories at this company going forward. And I think this will end up being in some Harvard business reviews or business school cases going forward, for sure. Christian, do you have
100%? I just thought of it like just thinking about Buffett and Munger, and not everyone might agree with this, but I think the new, even though he's a little bit different in his style, but he always references Buffett, Bill Ackman. I think over the next 5 to 10 years, I mean, Ackman's track record, he's slowly morphing into that next Buffett, someone that we respect, someone that we listen to, someone who's got great, investment acumen, can talk about anything, understands businesses. I think he's the next for me. I've always respected him, but I think as he gets older and he gets more, a little bit more wisdom under himself from his younger days of the activism, and more believing in America and believing in American business and owning great businesses like Chipotle and now Alphabet and railroads. He has some of that Buffett in him, but he also understands more than what Buffett really wanted to go into when he talks about interest rates and shorting the 10-year. I think he gives a little bit more of a macro with the stock picking and with the long-term investing, that he just even brings it to another level where I think over the next 10 to 15 years, we'll look at Bill Ackman in the same way we might look at Buffett now, as one of those supreme investors that when times are bad or when things go wrong that we listen to. I don't know if you agree with that or any comments on that.
We did have a talk or two around what Berkshire Hathaway needs, if they need someone else from the outside to come in and take over and provide something different. But Jaguar was talking about how, and someone even just put in the comment section, I'll read it. Ajit Jain said it best: Tim Cook replaced Steve Jobs, and he did okay. So I am sure Buffett's handpicked successor will do fine with $200 billion in cash. And he did say it a little bit differently than that one. But I do think that you don't get to where you're at being Warren Buffett and building this company without surrounding yourself by the right people. And I have faith and would love to give the people that he has entrusted into the company the opportunity to prove that right. And I think that we will end up seeing that. And truthfully, I have immense amount of reverence for Warren Buffett, where I do think that it will end up working out pretty well. So I don't know. We'll see how this discussion goes 5 years into Greg Abel's or 2 years into Greg Abel. Getting the backing of Warren Buffett at the start is huge and can push you a long way. But 3 years into it, you're losing a lot of money. You're lagging behind. There's only so long that leash goes. But my point being, I think that I have faith that Warren Buffett has been able to surround himself by the right people, create Berkshire Hathaway into what it is, and I have faith that the next person that he is really saying that he would choose will end up being the right person. And if he's right, then this is not a discussion we're having for the next 20, 30 years, as Buffett did mention during the event that anyone who is considered for the Berkshire Hathaway CEO would not be someone who is looking to retire at 65. It would be someone who wants to be there until they're 93, 100, 99, 100, whatever it is. So some interesting language there. But Bill Ackman has done very well for himself. Maybe it's a different discussion a couple years after the succession happens and Greg Abel has had his opportunity to put a stamp on it, and we'll see what he ends up being able to do. But I think he is going to get his opportunity, at least. I do. I think he deserves it as well. I think it's a faith into what Warren Buffett does as well, truthfully. It is the underlying of all this and why I really think it's going to happen. What did you think of? I know you're kind of have turned into a little bit of a foil to the Tesla bulls on here. There was some commentary around Tesla's insurance efforts, and Ajit, who is competing against Tesla in insurance, was saying that he was not super impressed by Tesla's insurance rollout, was talking about how a lot of people find and think insurance is a very easy business, and they find out it isn't. I thought that commentary was interesting, and I know you and the Tesla bulls have been going at it a little bit. Did that make you excited? Are you a self-proclaimed Tesla bear? Are we able to say it or no?
Well, I wouldn't say I'm a bear. At the moment, I've just found opportunities that were just more compelling to me over the last 6 months. So it's not that I'm bearish per se, and I'm definitely not super bullish per se. But it's more of just, reading the tea leaves and seeing what's working and what's not working and where the fundamentals are going. There's cycles to everything, and just the fundamentals of Tesla and the stock prices kind of proved it out. It just weren't matching up with other companies. So I just think you lose opportunity costs when you're sitting there. And again, I'm an investor and I'm also a trader. So, just sitting there, if you have huge amount of capital in a stock and it's not moving, you see all these other stocks ripping, to me, that's opportunity cost. And I kind of got to get in front of that. So I don't think it's as much as bearish as it's just more of just being realistic in the moment we are. Now, that being said, Tesla at any moment could do anything. It could rocket, and we've seen that happen. So I'm always, looking at opportunities. But as far as the insurance piece, I thought that was interesting. And I thought that question with Tesla, and that always comes up. If you've noticed, though, Tesla rolling out insurance across the states has slowed. Since Zach Corcoran has left, who I think was in charge of that, it hasn't really gone into more states. So I don't know, and I've kind of done a little bit of research on it. I don't think they make much money for it. It was more of a thing to put out there to help Tesla customers or lower their insurance costs because they were getting, quoted high costs from other companies to insure Teslas. So I thought it was more that rather than a money-making business. So, I think the key to Tesla, like short term, and Elon's even said this, and I think this is the crux of the argument. Like, if you don't believe in autonomy, then it's hard to be a Tesla investor, right? Because if you just look at the core business, which is auto, it's probably fully valued here, right? It's 600 billion or whatever it is. So you need these other things to happen. And for me, as if I'm a long-term investor or even a trader, I need to have some type of certainty, right? You can never have full certainty, but you got to deal in probabilities. So I got to say, okay, what's the probability of a robo-taxi or autonomy hitting in the next 12 to 24 to 36 months, right? And I don't know that. So when I look at other companies such as like Alphabet or Amazon, even though there's maybe less upside, it's more predictable, right? And they're just killing it fundamentally, and the free cash flows are exploding and growth of revenues exploding. So me, it's easier to make a bigger bet on those companies rather than Tesla. So I think that's where my head is, more than I'm just super bearish on Tesla. It's just I think my capital could be well served in other companies. And that's kind of played out over the last 6 months because you see Tesla struggling. It's been down 40% down year to date. I think now it's down maybe 25%, when these other companies like NVIDIA and Google and Amazon are all just, and Meta, is all doing very well. So I think that is more my play rather than just being a Tesla bear.
Gotcha. I hear you. What's your thoughts on Apple? There was a lot of discussions around Apple at this 2024 annual shareholder meeting. Quickly to set the scene one more time, Berkshire Hathaway sold about 13% of its Apple stake. They still own about 140 billion. Their next largest holding is around 40 billion, so still a massive position in their equity portfolio. Now, Berkshire Hathaway is a business of businesses. They own Dairy Queen fully, they own Geico, etc., Fruit of the Loom. So there's a lot of names that they own that. So Apple isn't like 50% of what Berkshire Hathaway is. If you look at the market cap, it's actually a little bit lower down. Josh, I see you down there. If you want to come up and talk some of the more energy side of it, would love to have it. But yeah, they sold about 13% of their Apple. A couple reasons that I heard during this one. He didn't give the director reason about it when he was asked specifically about the Apple shares. He kind of dodged the question a little bit. He went specifically over to talking about market conditions, talking that he kind of likes cash right now, given where the interest rates are at, given what he sees in the market and all the opportunities out there, that he isn't specifically sprinting into opportunities. There was a lot of talks about patience being an extremely important thing that's helped him get to where he's at today. And yeah, the other thing that I heard was the talk around taxes, that he thinks the long-term capital gains tax rate will be going up in the near future, and it sounded like they maybe wanted to take the chance to pay what they're at right now. Obviously, their Apple's up a significant amount, and they have some probably massive amount of capital gains to be paying. Now, he did also make a comment that he thinks people spend too much time worrying about paying less taxes. So, I mean, maybe that shoots that in the water a little bit, but whatever. Point being, Christian, I would love to hear your thoughts on the Apple Warren Buffett part of this.
Yeah, so I'll talk about the Apple, but you said something really interesting, Evan, and I just want to kind of talk about it real quick because I think it's important. I think Buffett said, at 5.5%, right, on the Fed funds, he wouldn't even be putting to work at 1%, which I felt was striking because I've heard Buffett say in the past, interest rate is you can make a direct correlation to the value of equities, right? If you got a 10-year at 2%, say, rather than 5%, well, the value of my stock should be higher relative to the value of the bond. Because if I'm sitting here at 2% and I got 2% inflation, that should ultimately make my equities worth more. So that was curious that he said he wouldn't be putting money to work even in a 1% environment. That I don't know if it was a little slip or that didn't quite make sense to me because, his previous comments were, you can make that correlation. So I thought that was interesting. I thought Apple, and I've said this a year ago, that he would start trimming that position just because it's so massive. I mean, when you have a 50% portfolio, and I understand, Apple's a solid company, but it's still, you're taking a lot of risk, right? Because if anything happens to Apple, and we see it with the lawsuit, the DOJ going after them, you could be impaired greatly. And Buffett is managing money and people are entrusting his money. So having that position, even though it's worked out well, it doesn't mean it's going to work out well 3 years from now. So I started saying a year ago that he would start trimming that down, and that's what he's doing. I think that's prudent. I agree with the tax piece. Like, it is what it is. You have to do it. But other than that, I think Buffett understands that, there's only so much that you can do with the kind of money he has. But what I would say is having so much cash, to me, it's either hesitant for him. He's in a different situation. So we as retail investors or young investors, we can't really look to Buffett. We can look to the life lessons and what he's done over his career because he was much different when younger in his career. He took much more risk and he talked about that. But when you look at him now, he doesn't need returns, to be honest. He's making so much money on, buying treasuries at 5.5% that he's fine with that, right? And he's got his portfolio of equities, but he doesn't need to destroy the S&P. His legacy is intact. His record is intact. They're not hurting for money. The businesses are doing well. So him as an investor now is completely different from like us who are trying to like maximize our returns or trying to not take massive risk, but we're trying to grow our money 10, 20, 30% per year, right? To get to a certain level so we could retire, where Buffett doesn't have that problem. So the way he's doing it now, he's almost welcoming a dislocation in the market so he could put some of this capital to work. But as long as the market continues to grind higher and he could earn 5.5%, which is, billions of dollars he's collecting with no risk, right? Because he's just borrowing from the federal government. He's going to get paid. That is a huge buffer, and probably he loves it. And he kind of smiles when he talks about it. So I think he's on a different level. So I think we could understand it and learn from it, but I don't think we should actually copy it, verbatim, because we're in totally different situations. So I don't know what you think about that.
No, I think that is definitely some fair points. He's at a different point in his life than the average person, and when you're investing, your time frame, your time horizon, where you're at in life is an extremely important part of it. And I think this goes back to the kind of the paramount talk of where Warren Buffett is at in his life. It doesn't matter if he takes quite a loss on a single position. It's not going to impact him, his reputation, anything like that. Whereas if someone else does, it's a little bit different. So I think that you have to view everything from that perspective, and I definitely do agree with it. And I always love to know and understand the person I'm listening to, talking about, so that when they say something that's in line with that, okay, that's great, and I will take some thoughts of that. But when they say something that's out of line with what I would expect, that's where I tend to listen very intently because I feel like those should be the biggest takeaways. But I definitely do hear what you're saying. It definitely makes some sense. Ooh, Josh Young joining us up here with a hand up. Obviously, we know Warren Buffett and Berkshire Hathaway have been buying into Occidental. What's the level? Is it like $60, right around 58 or something? Every single time it goes there, Warren Buffett says, mine, give me. So there were some talks there. They obviously, Chevron is a top 5 position for them. Let me get this in front of me. Chevron is the 5th largest position for them, so major oil, gas, energy area. There was discussions around energy, reusables, renewables, shall I say. But Josh, you're kind of expert in that space. I would love to hear if you had any takeaways from what Warren Buffett was talking about yesterday.
Sure. Yeah. Thanks for having me. And I'm at the gym, so apologies. I actually stepped out, and there's apparently like a waterfall outside, so like a artificial one. So apologize for the background noise. So first of all, in terms of my two biggest takeaways were, one, better understanding the cash balance that Berkshire has. Lynn Alden put up some charts yesterday, and I just tweeted about it and put it up in the link up in the nest. Berkshire's cash position is actually roughly in line with its own historic position relative to its size. So if you size adjust it and then you compare it to other insurance companies, and again, that's radically different from what you're seeing in the headlines about the cash position as well as the narrative. But I think it's helpful to sanity check narratives and headlines versus actuals. I like Lynn for that. She does that on a lot of different subjects. And so I don't know that it changes things dramatically, other than maybe it's not as good a signal for sort of market timing. And maybe it's a little bit different from the narrative around, oh, Buffett invests very differently now than he did, let's say, 10 or 20 years ago. The one other thing that I took away from the meeting yesterday was Buffett sort of reiterated his view on what he would do if he was managing $1 million, which was he would go through and look at every small stock. He thinks that there's still tremendous value available to small cap value investing from a cigar butt sort of style perspective. And I like that a lot. I've talked about it publicly in different ways. I don't think it's just true for oil and gas, although I think it's especially true because it's such a hated sector and so unloved by institutions, and money is sort of pulled out of funds and other stuff on the public side. But I think it's relevant sort of also for the broader market. And Evan, to your point about sort of how different people have different approaches and timeframes and so on, I think it's helpful to see Berkshire with Buffett with his great long-term track record, but also like look at what they're doing and then hear Buffett sort of wistfully talk about how he used to invest and how he would love to invest like this if he had this much money, in terms of the sort of deep value, Ben Graham, sort of cigar butt style, which is again very different from how Berkshire is arranged and how sort of Charlie Munger influenced Buffett to change his investment approach as he got more money under management. So I guess I get that both of those are not energy specific, but having studied Berkshire and Buffett for a while, I thought those two were sort of pretty different from how people think about Buffett, as well as, I guess the one other thing is people sort of have this like weird idea that Buffett's a passive investing advocate. And, I think he is for people that are not interested in investing, but very much it sounds like to me that he's an advocate for deep value cigar butt style investing for people with small amounts of money under management or their own personal portfolios, as well as the inclination to go and dig. So just those were my two sort of general takeaways. In terms of energy specific, yeah, like they're still very bullish. It sounds like for oil, even without Munger there, it sounded like a couple years ago, Munger was a lot more bullish oil than Buffett was. Sounds like Buffett sort of hasn't changed his view that he's bullish, but maybe not super bullish. They still think that management matters a lot. They clarified that their Oxy bet was really particularly a bet on Oxy's management and their approach towards returning significant capital to shareholders and not trying to grow at all costs. And so I thought that was interesting. And again, just sort of validating in terms of this value investors approach. And again, like you said, Buffett can like allow things to go away from him to some extent. He doesn't have maybe as much pressure on near-term performance as most other people, but he's still very bullish on oil and these particularly large oil stocks. And he would be able to say to sell it, or to like he started to trim Apple, or like he owned Barrick Gold for a little bit and then sold it. Like I think he could sell if he wanted to. And my takeaway is he's still very bullish, sort of medium to longer term, and happy to sort of, it sounded like he's going to go buy a bunch more Oxy stock subject to getting a good price on it.
It does sound like that. Now went out and got the moved up the cap of what they could buy up to 50% of Occidental. He has said multiple times that he does not have immense amounts of interest in owning the entire company, which is a little bit of an intriguing one. But I would just, Josh, I'll let you get back to the workout and just hang out and listen. I know you've said that you enjoy just kind of hanging out in these spaces and coming up when you can talk, which I really do appreciate. And yeah, especially, and everyone down below as well. You guys should make sure you're following the speakers who come in and contribute and add so much to this. But why do you think he's in Occidental over, and I guess Chevron as well? Why are those two, you think, interesting for Buffett, and like what's different about them than some of the other companies? Maybe more an Occidental than a Chevron, but if you have any thoughts, if there's any similarities there as well, would love to hear it.
Sure. So I've seen different theories on it. My theory, based on looking at it really closely at the time of the purchase, is it's two things. One, Berkshire had already underwritten Oxy from a debt perspective when they helped Oxy fund their buyout of Anadarko Petroleum pre-COVID. And I think they looked at it pretty closely through COVID. And actually, interestingly, they were a seller of stock at a pretty low price that they got as a dividend on their preferred. There was an option for Oxy to pay that in stock rather than cash. They paid some of it in stock, and I believe Berkshire was actually a seller of that stock. So they were paying attention to it. And then at the time that Berkshire was buying Oxy, it was sort of the largest and most liquid stock in the oil and gas space that also offered sort of the most upside leverage for the price of oil. So I think that was sort of what they were getting at. And, I actually don't think that it's that different from many of its peers in terms of like return of capital. Like if you look across the large cap oil and gas space, there's various companies that are returning capital. And so I actually, despite what Buffett says about, really liking what Oxy's saying, frankly, you could read the reports of almost any of the large oil companies and they say similar things. And this is consistent with what Buffett has done over his history. I think there's like what he says and there's what he means. And I think it helps to pay more attention to what he's doing than what he's saying. And again, if you look at the reports, they sound really, really similar. I don't think there's that much differentiation in the return of capital strategy of Oxy versus some of its similar sized peers, which makes me think, one, he was familiar with it, and two, based on the measures of cash flow versus oil price, Oxy was sort of among the highest oil price leverage to higher cash flow of that sort of larger liquid set. So of the companies Berkshire could easily go buy a lot of, Oxy had sort of the most upside to higher oil prices.
Gotcha. I appreciate that, Josh. And I appreciate you taking the time out of your workout to come in and add the thoughts into this. Any point during this, feel free to jump in more. If you have any more thoughts as well.
Yeah, thanks. I'm gonna drop down. Thanks a lot for having me.
Appreciate you, Josh. Awesome. All right, let's keep going for a little bit here, Christian. I might come back over to you. I don't know if there was any other things that we haven't touched on yet. I don't know if you thought his comments around AI were interesting. He said multiple times that he doesn't really have the expertise around it, but he was a little worried about scamming and phishing and the possibility of that one. I thought the talks and the commentary around the U.S. and wanted to make a majority of their investments. He was saying that if they really do a massive investment, it's most likely going to be in the U.S. There was also some talks that he regrets not buying more Costco. Were there any other stuff that you want to pivot this conversation going into?
Yeah, I would just say I thought those comments on the AI were interesting. I think Buffett is just a very assured man, right? He knows what he knows, and he's really not even interested to learn. He loves learning, but the funny thing is, if he believes that he can't learn it or he's not interested in it, he just doesn't even bother. So, whether it's AI or a crypto like Bitcoin, to even not to invest in it, but just to even maybe understand it, he seems just very resistant, and that just could be his age. So I think it's at the point where unless he's been dealing with it his whole life, it's not even interesting him to even go down a little bit to learn a little bit more about it. So I think that's interesting. I think what will be really telling is, does his lieutenants like Greg Abel or some of the other gentlemen that run money at Berkshire, will they start to dive a little bit more into some of these companies that Buffett might think of as, maybe very speculative or hard to know, where I think people that really understand it would say, no, this is like the future, and not like the future like some crazy future, just like, okay, where are we going? Is artificial intelligence going to be in our lives 5 years from now, 10 years from now, in a very meaningful way more than it is now? And I think most people, even though we might not understand completely how it's all going to work, would say yes, right? A resounding yes, because we could see it, right? Just working through the model models. I mean, I interact with these models all day, and they're very powerful, and I'm sure they're only going to get more powerful as the capabilities get better. So I think that's something that Berkshire, if they don't kind of get looking into a little bit more and don't play a little bit in that space, they could really, underperform the overall markets. I'm not saying that, I know more than, Buffett's and its team, but I think it would be foolish not to at least start to investigate these companies and understand where value is and where it's not, rather than just saying, well, AI has great promise, but, I have no clue. I don't think that's a great strategy. So I think it'll be interesting to see if Greg Abel, when he eventually does get the reins, if he does kind of move it a little bit into this new future.
Yeah, that definitely is where a lot of the focus will end up being. I thought the commentary from Buffett around him taking a step back in general was definitely pretty meaningful. He was talking about it a bunch, that he just doesn't get done in the day as much as much as he was able to. And like we've said multiple times on here, the succession has already started, and I would like to hear more about it. But definitely something we're keeping an eye on. Going back over to this Q compounding thread from yesterday, like I said, he was there and he did a really great a bunch of bullet points that we started looking through, and I think that we still got what? Yeah, there's probably like another 20 or so in here, which maybe we'll keep digging through. Like I said, if you're in the live stream, which I'm going to repin up in the nest above, you'll be able to see my screen. I'm live streaming my screen on YouTube right now, so if you want to go in and see that and some of the headlines that I'm looking at right now in front of me, you can do that up in the nest above. Say hi in the live chat if you have any questions as well that you want me to ask. If you have anything you want Christian or Emperador or even any comments for me to read out, do that up in the link pinned up in the nest above. There's a tweet with a link to the live stream, and make sure to subscribe to my YouTube page while you're there, trying new stuff. And Christian, I appreciate you joining us up here, and everyone should make sure they're following your page. But yeah, looking back at this thread that I now have in front of me, we do have Geico has lower cost than virtually any insurance company. He's a little biased in that direction. Charlie was the best partner I could have ever have very imagined. I don't know if that was a little or whatever, but yeah, rough start here. Buffett feels extremely good about his exposure to Japan. The best time to sell wonderful companies almost never. Anyone who says size doesn't hurt performance is selling. There you go. A good little zinger from there. The market is there to serve you. Use it to your advantage. I think this goes back to that point of investing is simple, but it isn't easy. And a lot of times people like to overcomplicate stuff and try and make things harder than they have to be. And Buffett is definitely a proponent of going against that. The Intelligent Investor from Benjamin Graham is the best investment book ever, according to Warren Buffett. Now, this is a very popular one. I have the book. But I do get that questioned all the time about what's the best investment book, what's the best thing for beginners to do, what's this and that. My answer actually a lot of the time is YouTube is a fantastic, amazing free resource. And if you have a skeptical mind and a curious mind, both of those combined, along with a will and a want to actually become a good trader and investor, is really all you need. And I am a big believer in that. And there's a lot of other stuff, like we were talking about earlier. The stock market really is just one giant social experiment. This is all about human psychology and everything like that. And being able to understand that and play it and win the game is an important skill to have. So yeah, that definitely is a good one. But yeah, in general, if you're a newbie and you want to know what book Warren Buffett recommends you to go out and read, The Intelligent Investor by Benjamin Graham. A couple hundred pages, not too difficult of a read. You guys can go in and do it. Next quotes here. Always look at a stock like a business. I think that sometimes people get really caught up in the narratives behind companies and the hype and all this and that. We have many different examples of it. Stocks at the end of the day are just narratives in the short term and just different languages and different things you could sell people on. But in the long term, these are businesses. It goes back to that kind of quote of, in the short term, the market is a voting machine. In the long term, it's a weighing machine. And I know Buffett definitely tries to play more in that long-term area, looking for where the market is being priced incorrectly, and he sees an opportunity where some undervaluing is happening. He was talking about how Coca-Cola and American Express will probably never be sold, and Apple will probably remain the largest position of Berkshire Hathaway in years to come. A little bit different language, not kind of sticking to the we won't sell Apple as much as the Coca-Cola and American Express, but everything is in context with where and how large of a position Apple is for them. I have it up right in front of me on the live stream right now. You can see the top 5 holdings. Apple, 135 billion. Bank of America is the next largest at 39.2 billion. American Express 35, Coca-Cola 25, Chevron $19 billion is how much they hold. But those numbers, actually, the rest of them combined, 40, 70. Let's go up to 100, 120. He owns more Apple than his next 4 largest holdings combined. I think that tells you the scale at what that holding and probably what that conviction is at. Even though they have sold it, it's still by far their largest holding. So that was some interesting commentary there. Berkshire Hathaway will keep buying back shares in the company for the years to come. This kind of went with that quote I was talking about earlier, that the main kind of goal of Berkshire Hathaway is to increase operating income and decrease the shares outstanding. Buffett is a big fan of those share buyback plans. I'm sure he was very happy with Tim Cook doing and Apple announcing the $110 billion share buyback program, the largest share buyback program in history. I see a comment in that YouTube chat from Bruce Benty saying he compares AI to the atomic bomb and points to Keynesian theory. I did think the AI conversation was interesting. He compared it to the atomic bomb and saying that the genie is now out of the bottle, and we don't really know how it's going to end up working out. That there's going to be we're going to look back and there's going to be a couple things that we never thought would happen and we were excited by, and there's going to be a couple things that never thought would happen and are scared about. So I think it was definitely some interesting comments there around AI and the atomic bomb. Christian, I might have asked you this already, but you have any thoughts around the commentary that he was giving around AI, the deep fake thing that he might be a little bit scared of, and his kind of full-on admittance to his lack of understanding there?
Yeah, I mean, I think it just goes kind of back to what I said before. I think if he doesn't understand it and doesn't really want to understand it, the comments come off as, kind of, either scary or, insulting. He said Bitcoin is rat poison squared. It's just, or that might have been Munger, but the general sentiment I think is shared among both of them. I think when they just don't have the circle of competence, getting back to what you've talked about, of Buffett's principles, a circle of competence, when it's not in his circle of competence or even on his radar, I don't think he really has anything constructive about it other than just some quick thoughts off the top of his head. That's just in my opinion. Maybe he studied it more and I'm reading it wrong, but I think just the new stuff that comes out, if it doesn't hit him as something that he really wants to dig down on, it just comes off across as a little bit flippant, and he really doesn't talk about it on a level where we could really understand, where he's coming from. It's just more of a dismissal rather than an argument for or against, I think. So that's where I come from it. But getting to the school of why he invested in Apple, that's kind of my theory with Alphabet and Google. It has its challenges, and it's had some rollout issues and some problems with wokeness and things of that nature. But Google's one of those businesses that, when you look at it, it's essentially one of these companies that grows top line revenue. It grows bottom line profits. It's buying back stock. It has more. I believe it has more cash on its balance sheet than any company in the world. I think even Apple. I might have that wrong, but they're just growing, incredible. They have assets like, YouTube and Google Cloud, which is the third biggest cloud, growing super fast now. Now it's profitable. Plus they have the advertising, which everyone said would go away as these, AI advertising or clicks would come on, but it really hasn't developed, right? So you have this business, and that it's kind of one of my portfolios, and that's one thing I learned from Buffett. Like, I love those kind of plays. Like, it's not like super exciting, but you could just generate great returns for little risk when you buy these beautiful businesses, right, that they just throw off so much cash, buy back their shares, and they do it year after year after year. It's one of those things where, going back to your point, just keep it simple. So I have a lot of those things that, like, I don't overthink it. I just keep it simple. It might not be the sexiest. It might not give you the 10x, but if you double your money over a 5-year period or triple your money over a 5-year period and keep that risk low, it's just a no-brainer to do. And I think that's the biggest lessons I've learned.
The good old KISS method. Keep it simple, stupid. Yeah, it definitely makes some sense. Interesting. Let me get some more stuff back up in front of me. Let's keep it going through here. Ooh, Emperador, what's up? Got anything you want to add in?
Oh, I saw an interesting comment on the AI stuff with the atomic bomb and nuclear kind of comparison. And basically it was like more of their theory was it was more of a fear thing. I thought it was interesting because I thought about it as revolutionary, but then it seems some other people were taking it as AI is discovered and then the danger of it is known and it has to be throttled back, kind of like how we haven't seen nuclear detonations in quite some time. I just thought that was a really interesting theory that he would go with that side of the argument, but I'm not sure I agree with it. I just thought it was a really interesting topic of conversation about AI in the long term, because everyone seems to be super AI is the next greatest thing, right? But the dangers of it, I don't think are being talked about as much. And so it was interesting to see if anybody thinks that, maybe that's the side of AI that he's a little skittish on.
No, that is definitely some fair thoughts there. The only thing he specifically talked about was the whole deep fake side of it. So I think we're just really up in the air, and he was very hesitant to give real thoughts behind AI. He kind of kept defaulting back to the I don't know anything answer, which, again, it would make sense for him to not be the number one biggest AI expert in the world, but I do wonder how much he actually thinks about it and what his general thoughts are, really. I would imagine it's more than I don't know fully. But Warren Buffett does like to live by the invest in what you understand and what you know. I guess it's good for him to walk the walk, what he's trying to talk the talk. But yeah, no, I think those are some fair points. He definitely... we'll see what AI is. We'll see what AI becomes. There's a lot of thoughts around how massive it's going to be, and it's starting to pick up, and it's even reaching people like Warren Buffett, who I'm sure at 93 years old didn't expect to be talking about AI and getting so many questions about it like he is here. Interesting. I appreciate that, Emp. If we still have you, anything else you want to add into the conversation? I know you're a little busy.
Oh, yeah, Evan, I'll probably drop off in a second here. I just want to say, yeah, thanks for doing the space. I think it's important to, I don't think it's like the sexiest topic, but like a lot of people could learn about Buffett and Munger and their history. So I think it's always good. Like I've researched so many videos going back to the early days. And like I said, Buffett now and Buffett when he was young are completely different. Buffett was trying to grow capital. Now he's just kind of in preservation mode. And I think that's the difference. So I think, reading The Intelligent Investor is a great book. And I've read the book. But what I would say to the audience is that book, it's a great book to understand, but it doesn't really translate to today. Because a lot of those companies back then were selling for like cash, or the intrinsic value is basically their assets. So you could literally buy these companies for like book. And you can't do that anymore, right? All these companies, the greatest companies in the world, are trading at premium valuation. So if you're waiting to like get these companies at those type of prices, you're going to be waiting forever because it's never going to happen. The market is very more competitive than it was back then. There's a lot more people in it, very smart people. And when Buffett was doing it and coming up, he was able to find these, and Benjamin Graham, they were able to find these companies that were completely trading, void of any fundamentals, right? Where you could find these companies that are literally selling at less than cash, or do like a little thing and say, okay, in 2 years, the assets that they have, like their infrastructure, is more than what the the market cap of the company is. And that's just not really, you're not going to find that today. So I think if you're reading The Intelligent Investor, it's just important to understand that was a different time. The principles are the same, but I don't think that the situation that we have now is a situation back then. So I would just keep that in mind. And great space, Evan. Enjoyed it a lot.
Awesome. I appreciate you, Christian. And everyone who joined in. I know we had Jaguar on here. We had Josh Young come up for a little bit. Emperador got a word in. So I appreciate you guys for joining in on the spaces and making it so fantastic. A good time. Emperador, you got anything else you want to add in here?
Not really. Just because, there were several times I wanted to jump in. I've been making breakfast for my boys Sunday mornings. It's kind of my routine with them. So get a little tied up on that. But there's been some really interesting points made just in general. And I've just been soaking it in. And I tried to watch, pieces of it. I was following you along yesterday. So I appreciate you, getting all the Buffett key points out there for everyone, and then kind of going back over this morning. And then I turned it on to try to watch some of it last night, and it was late enough that I ended up falling asleep probably an hour in or so. But I really like what Christian just said, putting the context with it. So it's always great to learn, everything you can from these great investors, especially historically. But you also got to, market conditions do change, right? So you do got to keep that in mind too. You don't want to just go mimic something, but you definitely want to learn from it. So I definitely agree with what Christian just spoke about.
Those are definitely some fair points there. Awesome. I appreciate you, Emperador. I am going to probably close out the spaces here. I'm going to stay on the YouTube live stream for probably another 20, 30 minutes or so. I got some stuff I'm doing. I'm writing the newsletter right now, actually, and a couple other posts going. So I'm going to hang out on that live stream for a little bit. If you want to stay hanging out with me, go up to the tweet pinned up in the nest above, click into that, join in on the YouTube live stream, and you'll get more of this type of content, this conversation going for the next probably 20, 30 minutes or so. But Emp, I appreciate you being up here. Everyone should make sure you're following you. Christian, and we also had Jaguar up here for such a long time. Once I close out this link, there's going to be a full-on recording, which you guys are want to come in and listen to, and it will give you that ability. But I enjoy doing spaces. We're going to be back tomorrow morning at 8:15 or 8:30 a.m. Eastern for to kind of help you get ready for the day in the stock market with Kevin. Then we're going to do some live trading as well throughout the morning. So stock market is almost back. We're in the big time here, and I appreciate everyone for being on the spaces with me. Like I said, though, I'm going to continue this. I'm going to stay live for an extra 30 minutes or so. If you want to hang out with me and talk some Warren Buffett, talk some Apple and everything like that, go up into the tweet pinned up in the nest above. Join me on the YouTube live stream and say hi in the chat.
Evan, let me ask you one thing. Everyone should definitely start joining into these morning spaces. They're a great way to start your day, get your bearings on the market. What time are you starting up in the morning?
I do vary a little bit from time to time. I would say the average time would be an 8:15 to 8:45 start, given if we have data or something like that. Monday, I'm excited for the market to be back. I'm probably going to be going live at 8:30 a.m. Eastern tomorrow morning. But just be on the lookout in generally that 8:15 if we have big data coming up at 8:30 or 8:45 if it's a normal day, is what time we're going. And we generally go until the market open. So yeah, it's really great to get your days started with us. And yeah. Awesome.
Well, I may try to jump over. I can have the YouTube stream playing, so I'll continue listening to you over there. But everybody else, make sure you're following Evan. Obviously, if you're not, you probably are if you're here. If not, follow him, and then check in with the morning spaces and all the other great content that Evan throws up here for us. Appreciate all you do, buddy.
No, I appreciate you, man. Big stuff coming. Awesome. All right. I'm going to be closing out the spaces here one more time. If you want to stick with me, this is literally the last second. I'm going to close this out. Up in the nest above is the tweet to join that YouTube live stream link. We're going to keep going for the next a little bit, 10, 20, 30 minutes. Talk some Warren Buffett, talk with the chat, Apple, all that good stuff. Join in. Spaces is over. Appreciate you. All right. Sorry about that. That space is now done. was a interesting day, a good conversation around Warren Buffett and everything that I am watching there. But now, I don't know if you guys saw what I've been doing for the last 10, 20 minutes or so. I've been actually writing the newsletter that I do. Finance Visualize is a newsletter that is pretty much all meant to be data visualization and graphics and different charts like that. So that is really the goal of what's going on here. This Warren Buffett one, we made these. We got some good stuff coming, more updates. I actually, chat, if you are here, can you guys give me your thoughts? Which one of these Apple ones do you like better? Option 1, which is the little bit of the more kind of retro-y feel, the beige, whatever background we want to call this color, or do you like the black background one? Let me know which one you guys prefer, and I'll end up using that. But yeah, let's keep going. Apple reported earnings after the markets close on Thursday. Reporting numbers up. I think a comma. Thursday, comma there. You guys are gonna see my terrible grammar in first place. But Brad, I appreciate you being in the chat. Max, even though you were talking a little bit of shit, we're still chilling. AN, you like number 1 better. I think I like number 1 better too, actually. And I might just got to go with what you're saying. 1, we got a Brad saying a 1 as well. Okay. All right, I think you guys are right. All right, let's do this. Apple increases quarterly dividend to... let's get rid of these ellipses. And Apple also announced the largest share by... Apple also announced a new $110 billion share buyback program. The largest share repurchase program in stock market history. And then we'll use this graphic up. Get rid of this. All right. Should we expect Apple stock to keep going up? Yeah, I have no idea in the short term. That is a loser's game to, I personally think, to say and try and guess what's happening. But I will say I am a little biased. I am an Apple. It's my largest holding. I'm an Apple fanboy. The earnings that they gave out were ahead of expectations, which is a good thing. But the year-over-year numbers were down a little bit. This share buyback program being $110 billion is massive. Like, it kind of goes you to just a show of like how much of this company they're buying back and over the years and the tiny increase in the dividend. I am a believer in Apple for the long term. I really wouldn't be surprised if it ends this year basically at S&P 500 market performance, but I have no guarantees. I like this name for the long term still. For any of you guys who don't know the story behind how I became an Apple shareholder, when I was like 12 or 13 or 14 or something along those that age range, I think it was closer to 13. Me and my dad were talking about just investing in a stock, and I'm lucky for that. And we had a custodian account that I bought in some Apple. It was just before the 7-to-1 stock split that they did back in the day, and I've held it ever since. And I've had the choice of, do I sell some Apple as it's become a significant part of my portfolio and more even out and balance out, or do I build around that Apple position? And I've kind of chosen to build around the Apple position, but it could be different for everyone. I haven't bought Apple shares in a long time, so but I haven't sold in a good little bit. I took out my initial cost basis a couple years ago at this point, and I've just kind of been riding free and risk-free in my mind. It's funny that the whole girl math meme that went on for a little, doing whatever that is, for me, boy math is one example of it, is when I own a stock and I sell out my initial cost basis. Now in my head, that stock is free. It's not. It very much is not. It's still my cash, and I want it to go up from the moment we're in right now. But yeah, that is definitely some math that goes through in my head, which I guess is funny. All right, continue going with this. More Apple earnings graphics. More Apple earnings graphics. Let's do that. All right. And yeah, if you guys have any thoughts, questions, comments, anything you want to add in, please throw them into the chat. Makes these things a little bit more enjoyable. App Economy, they post some really great graphics. Let's get that one on for Apple. I could do it for Berkshire Hathaway as well. Let's find your Apple one. Okay. All right. Apple. Let's make sure we source this. I think we can dig out. I'll do that. Let's do Brad. Evan, do you only invest or do you trade stock options as well? I really only invest. I'm really only a long-term investor. I have been playing around. As many of you guys know, I do Predictogram a lot. One of the companies I've been working with for a little bit. And what you do is you end up just making predictions about the market. Not really stocks or anything, but as you can see by those stats there, for the last 30 days, I'm shooting 87% on here, absolutely killing it. And that's kind of gotten me thinking maybe I make a little bit of a real life trade or two. So I would class myself really only as a long-term investor at this point in time. But given how much I've enjoyed the Predictogram aspect of it and the kind of gamification of it, we'll call it, it has made me very interested in continuing to trade and do more stuff. So currently right now, just a long-term investor, but who knows? We'll see. And one thing that I do think, everyone wants to be the expert in the space, and the truth is there's only a couple people who are going to be those experts, and everyone else is just trying to make it in the trading game. And I think that relatability is something that gets lost a lot in social media, especially in the FinTwit space. So if I ever do the trading thing, my angle would be I'm not a good trader at this point. Come be on a journey with me as I hopefully become a good trader. And that would be the goal there. So if I ever do it, it would be coming from the perspective of someone who is a novice, looking to get better and looking to help people along the way and show people that you don't really start at 100. You start at 0 and you got to build your way up there. And the goal would be to continue to do that. But Predictogram has given me the thought, the faith that I can do this. And it's actually one of my favorite things there. I have been working with Predictogram for a little bit, so I guess maybe I'm biased, but at least gave me the want to give it a chance. But I freaking love that app. It's a fun time for me. So Predictogram, join my team. Yeah, if you have any thoughts about what I'm even talking about there, send me a DM on whatever platform you're on, and I will let you talk about it. Okay. Let's get back to this. More earnings graphics. I use that one. Brad Freeman. Brad posts some really great one-pagers that I like to use. His newsletter is fantastic. In his link in his bio. Go in and do that. But I love those one-pagers. Here we go. Okay. More. And then make sure we source him. Let's close out of that. Do this. Okay, and then I think there was one comment from, let's get over here. I think I want to get the AI comment from Tim Cook. Let's see. Okay. This one. I think this comment is a good one, and that's pretty decent for the Apple earnings for now. All right. Okay. I think maybe, what do we think? Let's get rid of all this. Let's get rid of this. No. Let's get rid of this. For any of you guys who don't know what I'm doing right now, I'm building my newsletter. We already did this one. Should be going out in like an hour or two, what would be my guess? Let's see. Yeah, I think I agree with you. I think this one is better. I'm gonna get rid of this. So like we have good morning everyone, and I spent my entire Saturday listening to Warren Buffett speak, and we got some major updates. Plus earnings season is in full swing. We'll go with this. Talking about Warren Buffett, Apple earnings, and more. Warren Buffett spoke for 6+ hours on Saturday at Berkshire Hathaway's annual shareholder meeting. More updates. I spent all day listening to Warren Buffett speak at Berkshire Hathaway's 2024 annual shareholder meeting. I took the 6+ hours of Buffett talking and made a 10. Let's include the CNBC. No, actually, it's in two things. Let's not. Check it out and make sure to subscribe to my channel while you're there. By the way, guys, if you ask any questions or anything in the chat, then I will definitely answer that, but I'm going to keep doing this. Earnings season is in full swing, which means you need to get used to using Earnings Hub every single day/week. Earnings Hub is the ultimate place for all your earnings needs. Click into a stock for more info. Here's Apple, for example. Team. Awesome promo. You can't miss. Unlimited notifications, custom earnings calendar, AI transcripts of earnings calls, unlimited notifications. Said you would also promo. Okay. Yeah, that looks pretty good. Apple reported earnings after the markets close on Thursday. Let's do the posting numbers of EPS of $1.53, being expectations of $1.51. Revenue, iPhone revenue, service. Let's put services in front of iPhone revenue. I feel like it goes better into this. This is a really nice graphic, right? Evan GPT, what's up, Emperador? Appreciate you joining in, helping out with that those watch hours. I am on that YouTube grind up to the 4,000 watch hours. All I have to say is it's difficult. The Warren Buffett video that I posted yesterday, which you can see a little bit about what my screen looks like, what they'd be pushing my way. Oop, nope, didn't mean to do that. Let's go back into YouTube, view your channel. You can see we're live right there. This one did really good, actually. 2.8K views. Got me a couple watch hours going. We need more videos like this, but these live streams, even you guys just listening in here, helps a bunch. Let's see here. Let's do some quick math about where we're about on watch hours for this live stream. Okay, times. I'm at about 18.2 watch hours during this live stream. So let's say 18.2. No, wait, let's do the 4,000 watch hours you need divided by the 18.2 this is. I would need 220 live streams just like this in order to get to that 4,000 watch hours. So basically, I'd be a streamer every single day. Does Earning Hubs give you the numbers immediately when the results come out? Not quite yet. They're still a little bit delayed. They get the earnings call about like an hour in. Like, for example, here's an AI transcript of Apple's earnings call, which actually, this is the coolest thing on here, I think. But yeah, you can read through this. It does take a little bit of time for you to see the numbers. This is they put out Earnings Hub like 2-3 weeks ago at this point, and what they have already I really do love. It's just about what it can become and getting all that information. Just looking at some of the stocks that report earnings next week. Obviously, Palantir will be a really big one that I know all of you guys will be watching. Yeah, the AI transcript is definitely the coolest part. We have Palantir earnings coming up. That one will be a big one on watch. If we had Josh still in here, Occidental is one that I'm sure he's watching. Electronic Arts. One thing that I'm not sure if a lot of you guys knew, I actually grew up playing FIFA all day, every day. That was my life. The first place I started like investing and trading and putting that to use was on FIFA, on Ultimate Team, and doing the coins and trading and all that fun stuff. I genuinely really did love it. But we'll see. They're kind of a mean company. And do they take advantage of children gambling with their parents' credit card money? Yeah. But I guess it's not illegal. On Tuesday morning, we also... Ooh, Tuesday morning. Disney's reporting Tuesday morning? That... Interesting. Gold's webcast. What? That's so weird. They're... All right, I guess Disney's reporting earnings in the morning now. I did not know that. Fair enough. You learn something when you come on here. But we also have Celsius earnings Tuesday morning. Uber should be a fun one. ARM Holdings, Airbnb, Trade Desk, Wednesday after the close will be a big one. Oh, you invested a little into Turtle Beach. I've had some good thoughts of like a couple of these like gaming related stocks, like a Logitech, even like a Twitch through Amazon. Like I enjoy it, but it's definitely been a rough one, and that's part of the original thesis for Nvidia for me a couple years back, and it paid well. It turned into something completely different, but it did pay out pretty well. Shareholder return. All right, more. All right. Do I do more, or is it kind of done here? Let's end it there. What do you guys think? Does this newsletter need another section on it, or are we good? I could add in some stuff around like Microsoft and Amazon and AMD earnings. Maybe I actually just do something quick. Let's put what I'm thinking, and then we'll go from there. More earnings from last week. Amazon. No, I think this might just be overkill. I have too many I want to do. All right, fuck it. We are going to take this out. All right, let's send this text over. All right, we got that sent out, so this should be good. Let's make sure we get the title done correctly. This earnings season is back. Warren Buffett. Update? No. Warren Buffett just spoke. No. Warren Buffett update. Apple earnings plus Warren Buffett speaking for 6+ hours. I'm not in love with that, but it's fine for now. Good morning, everyone. We're back. I spent my entire Saturday listening to Warren Buffett speak and got some major updates. Plus, earnings season is in full swing. Do this. kind of want to add in something else. Do I add in Q Compounding's thread too? I kind of did like it. Or do I just leave it? No, I think I will actually. I think I'm going to throw this in here. This was a really good thread yesterday by him. I should make sure I go to this this meeting next year. Let's do this. No, let's maybe get one of mine in there. This was kind of sad. I'm kind of afraid to play anything on here with sounds because they're just going to like restrict it or whatever. It's weird. YouTube is weird like that. All right, you know what? We're good, I think, actually, on that. And then... more updates. Let's make sure this is good. Subscribe to the newsletter. Warren Buffett. Maybe I link this back to... Let's do this. Where is that? Here we go. I tweet too much to do it that way. Let's get back here. Okay. Do that. All right, we'll just leave that one too. This hopefully should be good. Some new AI announcements coming this week. I mean, I'm for it, Tim Cook. Bless my portfolio. I feel like I want to throw like a subscribe to the newsletter somewhere else in here. But I'll let it go. Some predictogram. All right, newsletter is pretty much written there. Nice. Let's get over to this. Market watch. That's what we're watching for the upcoming week. Let's add it to the thread. Some good Wall Street Journal articles around it. Ooh, that is over here. Boop. Boop. I wonder what that little change there looks like for you guys, but let's put this here. Let's do this. Okay. What a cheat code. Don't even need to read the newsletter if I watch it correct. Exactly. That's it. That's part of this. If you guys are in here, you guys don't even need to be a part of it. It is true. Maybe we'll get the graphic design guy to keep doing it. Hey, shout out Taco Lover. And here's the macro calendar for this upcoming week via Market Watch. Let's look up the Treasury auction schedule. It is May 5th. So May 6th is Monday, 7, 8, 9. So we have just a lot of like within 1 year. Oh, actually, 3-year, 10-year, and 30-year bond all coming up this week. Okay, that'll be big for you traders out there. Definitely keep this one on watch. We'll get that going a little bit later. I'm shocked Disney's reporting in the morning. So let's look through some of the Seeking Alpha Catalyst Watch and go through everything. On Monday, what do we have? Notable companies due to report earnings, option volume, notable speakers at the 4-day Milken Institute Global Conference, including Bill Ackman, Elon Musk, SEC Commissioner, New York Federal Bank, the Federal Reserve Bank Chairman or President John Williams. Okay, so we got Elon Musk speaking on Monday, Bill Ackman speaking on Monday, and a couple others. That one should be interesting. IBM subsidiary Red Hat will hold its annual summit. I know that was actually quite a large acquisition that they did semi-recently, so we'll keep that one on watch. The Sleuths Survey, the Senior Loan Officer Opinion Survey on bank lending practices, comes out on Monday. NASDAQ CEO will speak at Dubai FinTech Summit. I wonder if there's going to be conversations there around the IPO market, how it's heating up a little bit, and they obviously want to see that IPO market continue to expand and only get bigger. Obviously, it is directly in their favor. It's directly in people like Goldman Sachs and all those investment banks' favor. So, well, some of those banks, I guess, could move off of commentary from the NASDAQ CEO, although I don't think it will. The United Launch Alliance Atlas V rocket is scheduled to launch Boeing CST-100 Starliner spacecraft on its first mission, and then Capri and Tapestry deadline for to answer FTC complaint. Those are both luxury companies. They own a lot of luxury brands, and there was thoughts that they're going to try and block that deal. Another quick water sip. All right, Tuesday. What do we got? Fidelity National Information Systems will host a live investor conference. American Society of Gene and Cell Therapy meeting will begin in Baltimore. A lot of small medtech names probably on watch here. Mobileye will appear at the BNP Paribas second annual Global Electric Vehicle and Mobility Conference. 3-day Canaccord Genuity Global Metals and Mining Conference, so that one could be interesting for a lot of those metal stocks starting Tuesday. Apple will hold a special event at 10 a.m. Eastern on Monday. Okay, definitely one we're going to want to circle there. 10 a.m. Oh, it's Tuesday. 10 a.m. Eastern on Tuesday to announce new iPad products and hardware services. Now, if we go over to this, but it's going to be... Oh, it's lower. This one. Apple has big plans to announce from an AI point of view during its iPad event next week. And at the company's WWDC conference in June. Now, one thing I do want to add, because I did see Mark Gurman, who is a Bloomberg analyst for Apple, for an analyst covering Apple for Bloomberg. Took a little bit to get out there. I don't think anyone thought Apple would debut any new AI features next week, so this idea should have immediately raised eyebrows and gotten second-guessed. The extent of the AI announcement next week will be related to the chip, not the features themselves. So it sounds like they're getting like the baseline for the chips to be able to start working, but we're definitely keeping that one on watch. Apple hosting an event at 10 a.m. Eastern. Apple hosting an event at 10 a.m. Eastern talking about that. There should be some AI announcements coming in that. Kashkari speaking at 10:30 a.m. in Colorado oral arguments regarding motion to dismiss from companies. Oh, that's Albertsons and Kroger. Okay. I don't know how much the market cares about that at that point. Muffin saying, Evan sounds like a college student. I do, yes, you're probably not too far off in the sounding there. I'm actually 25. So I have been graduated from college for longer than sometimes I want to say. It's weird that I'm getting close to a full college out of college, full 4 years. But yeah, 25. If you guys are still here and enjoying this, make sure you're subscribed to the channel. I'm trying to host more of these type of live streams, just posting more videos in general, trying to get those watch hours up, get up to the 4K. But yeah, so if you're in here, subscribe to the channel. You won't regret it. More stuff like this coming. Hit that bell button on my profile as well. YouTube can be weird with notifications, but if you tell them to send you a notification whenever I go live or post a video or something, that will get sent to you, and you won't miss anything. All right, Continue looking at this Catalyst Watch from Seeking Alpha. More companies reporting earnings. Philip Morris holding its annual shareholder meeting. Could watch that. Investor events include AirCap, capital markets, etc. Costco is expected to release its monthly sales report. Okay, that one will be a little interesting. After the markets close on Wednesday, generally 4:15 to 4:30, around that time, a little earlier is when we see those Costco monthly sales. Definitely we'll be keeping that one on watch. But yeah, that should be an interesting one. And then Vizio, which agreed to sell itself to Walmart, will report its Q1 results. For anyone who hasn't been a part of a company that has agreed or accepted an acquisition offer and they still report earnings, if for anyone who's watching Activision Blizzard, they're going to give, Vizio will give very light numbers. They're not going to give any forward guidance. They're probably not going to do an earnings call. It's going to be a very simple event. And yeah, we're just going to get some top line numbers. And a lot of the times, this is when they throw all this shit at the fan with the numbers, and what they report isn't as important because everyone is focused on the potential acquisition that is coming down the pipeline. So we'll see. I don't imagine too much commentary also around the acquisition at all. Can keep that one on watch. We have an earning as well. Let's move over to Thursday and Friday. What do we have? Norfolk Southern's annual meeting. Interesting. Snapchat co-founder Evan Spiegel, Meta chief product officer, and Reddit CEO will be speaking at the Bloomberg Tech Conference. Sounds like I don't imagine they're going to be on the screen together at the same time. That would be fascinating, but still a couple interesting ones. I think that tells you the scale at where these companies are at. We have the Snapchat CEO, and we have the Reddit CEO, and then we have Meta's chief product officer. No Mark Zuckerberg. He's above it. Bank of England will issue its monetary policy report. A lot of discussions around if the Bank of England is going to start cutting rates. So we'll keep that one on watch. Tapestry, first earnings call. We talked about that one earlier. Energy Vault on Friday. U.S. box office could get a boost with the opening of Kingdom of the Planet of the Apes. I don't know if any of you guys saw the trailer for Deadpool and Wolverine. Yeah, I'm excited for that one. That should be good. It's the 5-year anniversary of Uber price. Chicago Fed president speaking. All right. Keep going down. Let's look at the earnings calendar now. As we were talking about, busy day, busy week of earnings season coming up. Some of the names that I have highlighted here, Palantir tomorrow, Disney, and Celsius, and, good morning, Trey. Yeah, I definitely recognize you from the Discord. Appreciate you, man. Appreciate you joining in here. Hello. But yeah, Tuesday morning we have Disney and Celsius and Datadog. Those should be 3 ones that people are probably most interested in. Celsius has become popular. We got Crocs on here, Global Foundries, Ferrari, Rockwell, UBS, BP, a lot of big names, but Disney is probably the one I'm focused on. It is weird. Disney has typically been an after-hours earnings reporter, but for some reason they're coming here the switching over to Tuesday morning. Weird. Whatever. We'll see. After the close that day, Occidental, EA, Coupang, Twilio, Toast, Rivian, and should be interesting. Upstart. So a lot of small, medium names, probably a lot of names that you guys in here care about and watch and like to trade. We have Uber and Shopify Wednesday morning, followed by Airbnb, Arm, Trade Desk, Robinhood. I actually own a little bit of Robinhood. We'll see how that one goes. Reporting after the close on Wednesday. So another big day on Wednesday, and it tends to calm down on Thursday with really Roblox and I guess Warner Bros. Discovery, Yeti, Warby Parker. The direct-to-consumer model here will be a good one to watch in those areas. And then Unity after the close, they just announced a new CEO. So we'll be watching that area as well. All right. Then the macro calendar from MarketWatch. A couple Fed presidents speaking. Obviously, they had their release last week, and we know how much the Fed presidents love to talk all day, every day. Expect that to continue, and I would imagine that every single one of them is going to want to at least talk once over the next couple days and couple weeks. So I am prepared for that. I do think there is some sort of coordination in what they're saying. I think that people do share their opinions, but sometimes they might say stuff to hear what the market is thinking and how the market feels. So I wouldn't be surprised if we hear some language around, on both ends of the spectrum. The people who are known to be hawkish, for them to say some extra hawkish things to see how the market takes it, and for people who are dovish to say some extra dovish things. So I wouldn't be surprised if we hear more Fed presidents talking about not cutting rates at all this year. And maybe even talking about we don't know when we're cutting rates next year for one or two of the people on more of the hawkish side. And for the dovish type commentary, I'd imagine there will be one or two defenders of the 3 rate cuts that still might be coming this year. So expect a lot of commentary around that commentary. Ali, I think that this stream is recorded, yes. So you should be able to listen back to this whole thing. We talked a lot about Warren Buffett on here and then talked about some of this other stuff. I even wrote my full newsletter, which we'll be getting out soon. So, yep, this space is, this link is recorded. Shout out to that. All right, that is the majority of the week. We had a federal budget come in, consumer sentiment. This will move a lot of stocks, initial jobless claims, wholesale inventories should be good for you traders on Wednesday, a little volatility there. And then as we were talking about the auction schedule, let's zoom in a little on this. I zoomed in a little too far. All right, there we go. We got the 3-year notes, the 10-year note, and the 30-year bonds coming up on this week. 3-year on Tuesday, 10-year on Wednesday, 30-year on Thursday. I know that this one likes to, a lot of the traders like to watch this one as it can move some markets. So you might want to keep that one on watch. All 3 of those probably. We do have a couple other ones. I would say the ones under a year the market doesn't put too much into. So, yeah. But these 3 here, they come out at 1 p.m. Eastern. Generally takes a minute or two for the releases to get out there. These ones can cause some intraday volatility. So definitely keep that in mind. I'll be adding it to this thread in a minute. Let's see. Nice. All right. Let's take a look back through the timeline, see if there's anything else. And again, if you guys have any questions, thoughts, comments like that, throw it in the chat, and I would love to answer them. I did spend my entire day yesterday watching that Warren Buffett press conference, so if you have any questions or thoughts about what you think he said and talked about there, I can share what my understanding of it was. I love this cash thing. Let's take a look at how it built over time. Pretty impressive. Lot of cash. Even the last number, it was 2 quarters ago. Which is going to say Q4, but it was actually Q3 on here, which is interesting to watch. Over 100 billion now there. Once he got over 100 billion, it really only stayed. I wonder if it's going to crack below it. Not really. Yeah, but that 157.2, that was Q3 of 2024 of 2023, and then Q4 was 167 billion. Q1 ending was 189 billion. And then he also said that he expects by the end of this quarter there'll be over $200 billion in cash. Lot of money. I do not know what that like. If someone wants to give me 200 billion, I'll take it. Here's a heat map of the stock market from yesterday. Or Friday, actually, shall I say. Did you guys see this Amazon drone delivery video? I have so many questions around this. Like, imagine there's 50 of those, how loud that would end up being. Yeah, that's crazy. Obviously, the package is pretty small, so how big of something can actually be shipped in this? Probably not that big, and in general, it also can't be anything that's fragile, because that was not the most fragile of landings that I've seen. So this one, obviously, people enjoyed the video, and it was an interesting one. This one, this comment I made earlier on Peloton, that Buffett made a quote that the stock market is made to go up, and that's true about these broad-based market indexes. The S&P 500s, the NASDAQ 100s of the world that kick out their losers and take in new companies as winners. we have the Pelotons of the world that are examples of stocks that, you're not going to win every single one on. So if you had invested $10,000 into Peloton at its peak in January 2021 and held to today, you guys would have $174. Some impressive value destruction there. Let's get back to this. Jack Dorsey and Square doing some stuff. More in Bitcoin. This new Star Wars commercial. This one did pretty good. Expedia got hit pretty aggressively off of earnings. That was definitely a downwards move there. Apple increasing its dividend. This actually is all for naught now that he sold his shares. Let's calculate how much Buffett gets in dividends now. Apple. All right, Warren Buffett now owns around 790 million shares of Apple. All right, times 0.25. I believe that is a $204 million check. I think I made a mistake there. 790 million shares, 100,000 million, times the 0.25. $197.5 billion. And he would have received 226. I guess that's going to end up making sense on, let's see, 197.5 billion. And just some quick math, because he sold 13% roughly of the holdings. So what's 226 times 0.83? 187. All right, the math actually does that math check out. Let's bring this back. All right, no one's saying anything about the madness. All right, 790 million shares. You guys can see it. I need to double check on all the math every single time. Times 0.25, 197.5. And then let's get back up. And they did own... They did own 905.6 million shares times the 0.25. Gets me to that 226 number. Let's do this. You get to see a little live tweet coming up in action with Warren Buffett and Berkshire Hathaway selling the 13% of its Apple shares during Q1. They will with Warren Buffett and Berkshire Hathaway selling 13% of its Apple shares during Q1. Their dividend their Apple dividend check will also be going down. Buffett All right, let's test it out there and let's regroup. If you guys have any thoughts or anything you want to add in the discussion as well, I don't know. I enjoy these type of chill live streams. Maybe it get you guys to know me a little bit better. Maybe I get to know some of you guys a little bit better. But yeah, just some of the stuff that I'm doing anyway. With Warren Buffett and Berkshire Hathaway selling 13% of its Apple shares during Apple shares, their Apple dividend. Shares. Their Apple dividend check will also be going down. Buffett will now receive a Oh, it's million. It is million. It is million. He's not going to receive a $197 billion check. No, that's crazy. All right. That would have been an error right there. Okay, good. With Warren Buffett and Berkshire Hathaway selling 13% of his Apple shares, their its Apple shares, their Apple dividend check loss began. Buffett will not receive 197 dividend from just his Apple holdings, down from the 200 he would have received. All right. I think now that we have gotten through that struggle of posting a tweet, we may end the live stream there, coming to the end of this. Like I said, I genuinely do enjoy doing this type of thing. I would have just been kind of hanging out and doing all this stuff anyway, but I'd rather do it with all of you guys and get some of your thoughts in the chat and get everything that you guys get to add in. So I hope you guys enjoyed this. I hope this is something that you guys want to see more of. If you are here and on the page, make sure you are subscribed to the channel. Make sure you hit that bell button on my profile so that you get notifications whenever I do stuff like this, whenever I post a video and go live. They don't always send you all of the kind of stuff I'm doing if you don't turn on those notifications. And like I said, this is not going to be like a one-off stream or anything like that. I plan to be doing this a significant amount more. And I appreciate you, Brad and Ali and Emperador and Trey and Muffin and Bruce. We had commenting here. We had Max, the Joe Money Show, Vadim, Kick Shop, Jason, Abunk, Matthew, Pick 6 Cards. We had a lot of you guys contributing to the chat and the spaces, and I am very grateful for that. So one more time, subscribe to the channel, turn on those notifications. If you enjoy these type of live streams, like I said, more of these are coming. This is something I want to do more, and maybe it's more stuff of me just when I'm hanging out and doing this type of thing that I could just have a chat to do it with me in the background. So yeah, I appreciate each and every single one of you. I'm going to close the live stream out in any second now. Subscribe to the channel to get more of this type of thing, and we'll catch you all later. Peace. End stream.